COO over at Microsoft. Satya Nadella saying this is building on capabilities essential in AI and operational excellence. Carolina Dybeck-Happe is joining Microsoft as EVP and COO. It's a newly created role. She's going to be joining the senior leadership team, reporting to Satya.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Oh, leave.
Yeah, I think I'm still technically on leave. Harvard has kind of a funny relationship.
How long can you be on leave for 10 years or so?
Well, I guess we're going to find out, yeah.
Names that move markets are on Bloomberg.
I am a huge believer in trade. I believe that the benefits, the dispersed benefits to American consumers of trade are huge and important, and we've all enjoyed them. What is true is that the Chinese economy is doing something strange. They are leading the manufacturing of almost every clean energy product: wind turbines, solar arrays, batteries, EVs. But what's also true is they're by far the biggest polluter in terms of carbon emissions, and they're using their carbon emissions to try and drive their economic program of leading this energy transition to pull their very weak economy out of the ditch. So in fact, the idea that they should be charged for their emissions that are about a third of global emissions makes very good sense to me. And we're doing it in a not direct way, but it's actually a way that turns out to be pretty fair.
Bloomberg. Context changes everything.
German government official says we would welcome a potential increase of Kazakh oil imports to Germany.
About 3.4% to 4.3%. That's a big change. Now, it's from super hot to solid, right? So I don't want to make it seem like labor markets are weak. But it really starts to tell me that things are much more imbalanced than they have been for quite some time.
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
Fuse Energy has raised $32 million in a new funding round, valuing the nuclear fusion testing startup above $200 million. Right now, industry experts say producing commercially viable fusion will require another decade or two of work, giving Fuse plenty of runway for customers to test their new technology. Bloomberg's Lizette Chapman has the story. You and I know loads of people in the Valley who have been talking about fusion for a while, and this is like a sort of tangible startup and part of the process, but my goodness, it sounds like we're still a long way off it being mainstream.
The technology will take a decade or two at least to create commercially viable source of energy. Like you said, this company is looking to make money along the way by providing radiation as a service to not only the private startups that are looking to do this, as we've discussed, there's a lot of money and a lot of interest in commercializing this, but more importantly, to provide revenue and testing results immediately by providing radiation as a service to harden nuclear weapons testing, and then also use that data to build their own fusion generator.
Pulsed power machines is what they're building. Who wants to take the financial risk to back this? Who is interested in straight around?
Right. So there are a number of investors. There's Buckley Ventures, Josh Buckley. There's Tamarack, as well as the Chainsmokers, the musical group. They're a venture capital firm, along with former DoD and officials, and also someone from Lockheed Martin, the former chief executive of Asia. So they'll be looking to use this technology in different machines, like fighter pilots, et cetera, to see what the effects of a nuclear explosion would be on planes and other materials that that U.S. would need in time of war.
Ms. Chapman, we appreciate it. And talking of time of war, Anduril has just unveiled the Barracuda family of autonomous air vehicles, revealing its offering, of course, to the Defense Department program aimed at mass-producing aerial vehicles more cheaply. Anduril founder Palmer Luckey joins us now. And the philosophy here, Palmer, is just making it ever more easy, fewer parts, and making it quicker to make.
Well, I think that having fewer parts, easier to make, that's downstream of the real goal, which is to make sure that the United States, our allies, and our partners around the world have the tools that we need to deter expansionist dictatorships like China. Right now, in a lot of war games, we are modeling the United States as running out of critical munitions, particularly missiles, in just a few days of conflict. Anduril, for years, has been working to build a family of systems that solves this. And we just announced that family of systems today. It's called Barracuda. It's made with half the parts in half the time, using 95% less tools than a lot of the existing missile systems on the market. It is a mass manufacturable product that is designed to be made at scale, many thousands of systems at a time, because that's what the United States need, that's what our allies need, it's what our partners need.
Talking of partners and allies, drone AI over in Ukraine at the moment. You're supplying drones, we understand, piloted by AI, but how much is it AI? How much is it the human? How much autonomy do they have about targets?
Well, in our case, it's all about AI. Our core product is called Lattice. Anduril Industries has been working on AI-powered weapons for about 7 years now, and the core software is Lattice, this brain that powers all of our different systems, including Barracuda, including Altius, including Ghost, which are in Ukraine and have been since the second week of the war. We've destroyed hundreds of millions of dollars in critical Russian hardware that can't really be destroyed by things that require a real-time link to a person, because the Russians are quite good at jamming communications links when it comes to things that are important to them. They don't have enough of these jammers to hit the entire battlefield, but that's why it's so important that we keep taking those things out and eventually, hopefully, leave them helpless to these types of systems.
Palmer, it's great to have you back on Bloomberg Technology. In the context of Ukraine, I'm kind of thinking about the existing work and then, what we're hearing from Ukraine at the moment, which is they kind of want to push deeper or strike deeper into Russia. Does Anduril have any technology where you would work with Ukraine on that goal or be a part of that process?
Absolutely, with the caveat that these decisions are not up to us. It's up to the United States government. They decide who we sell to, how we sell to them, and to a large extent what they do with these weapon systems. And I don't think that Anduril or any private defense company, any private company, period, should be in a position where we're de facto controlling the United States foreign policy position by saying, oh, we would help with this, we would help with that. I think that we need to put that decision with the people who are supposed to be making that decision, which are people who are accountable to the electorate. In other words, you should not trust me. You should not have to trust me. You should trust somebody that you can vote for and then vote accordingly.
We're showing images of the Barracuda system, and at the top of the program, you talked about allies. And so when I think about scalability, is that because you want to be in service of any specific allies beyond the US government? What is the sort of benefit of the scalability of the design?
Well, this gets into a little bit the philosophy of it, but I'll tell you how I think about things. I don't think the United States needs to be the world police. I think we need to be the world gun store. We need to be able to provide our allies and our partners around the world with the tools that they need to turn themselves into prickly porcupines that nobody wants to step on. And I think that sending American lives overseas, boots on the ground, is not going to be the future of how we support our friends around the world. I think it's going to be making sure that we can make things at a scale where they believe that our support for them is more than just words. We can actually send them the things that we say that we're willing to send them. I think Ukraine has really exposed this weakness in the United States foreign policy strategy, where we say we support all of these people, but they look and say, well, they can't even manufacture the basics like artillery shells or small missiles. How could I possibly count on these people to be able to cash these checks that they're writing? And I think that Barracuda is a response to that largely. It's something that was designed from the beginning for low cost, high rate manufacturability. And it's a flying operational system right now with multiple customers. I think that partners are going to be able to trust that Barracuda is something that we can actually make for them and deliver to them when they need it, not just now, but also if a conflict were to erupt.
And you're delivering by manufacturing ever more in the United States and with money, talking about cash and checks. You've just recently got a whopping valuation of $14 billion by raising more money to build in the US the Arsenal One and other manufacturing units. Can you update us as to where they might be, these sprawling manufacturing areas?
We just closed a huge round with our investors. It was all of our previous investors coming in and a whole bunch of new strategic investors who want to help us build a lot of things, but in particularly Arsenal One, which is a 5 million square foot factory that we're building that is going to create thousands of jobs and build vast numbers of AI-powered autonomous weapons systems. And it's not just Barracuda, it's actually the entire product suite of things that Anduril makes. It's all of our missiles, it's all of our drones, it's our submarines, it's a reconfigurable factory line that is able to share a lot of the equipment and tooling between these programs, which gets the costs down and it gets the rates up and the benefits flow on to our customers.
Palmer, is Anduril selling air defense systems to Israel?
Well, look, I think I can't comment on any specific deployments, especially about something as sensitive as that, but I'll tell you this, I have no problem with Israel. I have no problem selling things like that to Israel, but a better target for your question would be the United States government.
And I have to ask you, you mentioned China at the top of the conversation. Has Anduril a commercial relationship with Taiwan?
Oh, we have a very strong relationship with Taiwan. I've been there many times. In fact, I'm going there again soon.
In 10 minutes time now, the top of the hour. Do you see the release of the WASD end stock numbers? Corn end stocks prior 2,073 million. Soybean end stocks prior 560 million. Wheat end stocks prior 828 million. Cotton end stocks a prior 45 million.
But it was in the wake of a recent deal that we did with Taiwan, getting them some systems that I think China, frankly, is really afraid of. They know that our systems are the real deal, and they know they can't jam them. They know they can't hack them, and that's because they're powered by AI.
Anduril founder Palmer Luckey, it's been a while. It's great to have you back here on Bloomberg Technology. Thank you very much. Now, coming up, Adobe earnings are after the bell. Earnings continues. We get the expectations next. The stock down 0.5%. This is Bloomberg Technology.
If you look at private equity just as one piece of the institutional equity market, there are 3 times as many dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different approach. It's a function of where you are in your life cycle. Everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising. And in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
$67 million viewers tuned into the presidential debate between Vice President Kamala Harris and former President Donald Trump. And that's only on TV, according to Nielsen data. It blew well past the 51 million who watched the Republican nominee take on President Joe Biden back in June. Trump said he is not inclined to have another debate with Harris, though he later added he hadn't completely ruled out another matchup. I streamed it, Ed, so goodness knows what the numbers really were.
Yeah. Believe it or not, earnings season is continuing. The next wave of generative AI services may depend whether tech companies can find enough detailed 3D renderings of tractor trailers and shampoo bottles. Adobe, NVIDIA, Autodesk, and several other startups are working on just that. This is something Bloomberg's Brody Ford reported, and he did it before Adobe's earnings after the bell tonight. Let's start with the report. I saw the image attached to the story. What are you going on about?
You know, look, you could go on the internet if you're so inclined and scrape a bunch of photos, a bunch of videos, a bunch of books. If you want to create a 3D model that can, generate a coffee cup or something like that, you need something that is not, you can't scrape it, right? And so we're seeing companies like Adobe going out, and note that they're not scraping otherwise, but we're seeing them go out and buy 3D data directly from creators. We're seeing Autodesk go to its companies for construction management and design saying, hey, you have these 3D renderings of bridges. What if you shared them with us so we can build this 3D model? I think the same way we've seen photo models get created, a year or two down the line, we're going to start seeing these 3D models come out more.
How much is Adobe able to monetize this new AI focus?
Well, that's the big question for tonight, right? Everybody wants to know whether Adobe is going to be able to really
So just less than 5 minutes now to the top of the hour. Where do you see the release of the WASD end stock numbers? Corn end stock, prior read 2,073 million. Soybean end stocks, prior read 560 million. Wheat end stocks, prior 828 million. Cotton end stocks, a prior of 4.5 million.
Hit the 10% increase level I expected. Brody Ford, we hope you'll join us tomorrow to break down those numbers. We appreciate it.
Thank you.
Meanwhile, that does it for this edition of Bloomberg Technology. Plenty on.
What an edition it was, from private companies to public companies, everything in between.
ECB officials haven't ruled out a rate cut at the October meeting, according to a sources piece.
On Apple, Spotify, and of course on iHeart. From New York City with Caroline, out here in San Francisco with me and a visiting Brody Ford, this is Bloomberg Technology.
So reading into this now, the ECB isn't yet closing the door to an October interest rate cut. ECB governing council members aren't yet in a position to rule out an interest rate cut at their next meeting in October, even if such a move is unlikely, according to people familiar with the matter. The piece notes that given the downside risks to economic growth in the Eurozone, officials would rather keep open the option to lower borrowing costs at that meeting, said the people who declined to be identified discussing confidential matters. We're surely expecting the Freddie Mac mortgage rates.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Menace Crenny.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg.
1 minute remaining.
Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Ten seconds.
Welcome to Bloomberg Markets. I'm Scarlett Fu. U.S. stocks in search of some direction after the latest batch of
Corn end stocks 2,057 million, 2,057 million, higher than forecast 2,050 million. Soybean end stocks 550 million, 550 million, lower than forecast 565 million. Cotton end stocks are 4 million, which is lower than forecast 4.5 million. Wheat end stocks at 828 million, 828 million, higher than forecast 825 million. Also from Freddie Mac, the US 30-year fixed-rate mortgage down slightly at 6.2% for the September 12th week from 6.35% the prior week.
So a little bit of the retracing of some of the moves that we saw since last week. We do have another auction today. This time it's a sale of 30-year notes in about an hour's time. The euro is firming just a hair by 0.25%, even after the ECB cut rates for a second time. We're going to dig into that decision a little bit later on and the implications from that. Let's go back to the equity side here in the U.S. and check in now with Abigail Doolittle, who has a couple of movers for us. Abigail.
Indeed, because beneath that surface of the S&P 500 barely moving, we do, of course, have a bit of a bull-bear battle. Take a look at the shares of Warner Brothers over the last 2 days. You can see the move higher today, up 7.5%. The best day in quite some time. This after a distribution deal, a new deal with Comcast. So essentially their channels, including CNN, among others, will go out across Comcast. So investors really liking this news, signaling that they think it's going to be good for the bottom line. Turning to another big winner on the day, the shares of Kroger, the grocery store, up 5.8% on the day. A pretty good pop there. And this after they raised their sales view. They're saying that they're seeing decent demand, good demand for their stores at their grocery markets, and that a piece of it has to do with their ability to lower prices while personalizing the experience. Another situation that investors are cheering. And then finally, it's not all good news, obviously, with the S&P 500 down. Let's take a look at the shares in Moderna, down about 17%. They cut their R&D budget. They're also trimming back the pipeline. This after they're seeing less pickup, less demand for the COVID vaccine. This stock, since the pandemic, down more than 80% today, a piece of that clearly. And then Micron was downgraded, down 4.6%. It's interesting because NVIDIA on the day, and we'll be looking at this around 12:30, Scarlett, up for a fourth day, a really nice gainer there, but the chip complex overall, not so much. Micron being one of those stocks among the chips, the stocks that is down.
All right, fantastic wrap up there. Thank you so much, Abigail Doolittle, and it really indicates how there's a lot of movement underneath the surface, but really the macro outlook is hanging over financial markets when you look at it from an index perspective. So let's bring in Bloomberg's Michael McKee, our chief economics correspondent, international policy correspondent as well. You cover everything.
I cover.
Mike, we had two data points today that really get to the heart of the Fed's dual mandate. We had inflation and employment data. Let's start with producer prices, which came in hotter than expected.
A little bit hotter than expected in both the headline and the core. However, most of that was in services and most of that was in trade services, which is the margins for retailers and wholesalers. So it's good news on the profit side. It does tell the Fed that the battle against inflation isn't necessarily won yet, but on a year-over-year basis, prices went down for the PPI as they did with the CPI. So the Fed is looking at still being able to stay on track to cut rates.
So the disinflation narrative is still intact when you look at it in a big picture point of view.
Yes, absolutely. We see some areas going up and down, but you've got more going down than up right now.
Okay, let's talk about weekly jobless claims, because that also picked up for the first time in 3 weeks. And I know that because it's a high frequency data point, we tend to say, oh, but you got to look at it over the longer term. Continuing claims also moved higher for the first time in 5 weeks.
Well, here you got to put on your nerd hat.
Well, we do that all day.
What we tend to look at with jobless claims, and you can see on the screen there, is the seasonally adjusted, which is the blue line. The non-seasonally adjusted white line is what's kind of mattering right now, because that would show you if there were a lot of layoffs happening, that would be going up. Instead, the number of non-seasonally adjusted claims went down by 13,000. And then,
so a release from the Fed here, they note household debt rose at a 3.2% annualized rate in Q2. Total non-financial debt rose 4.7% annualized Q2. Non-financial business debt rose 3.8% in Q2.
A labor market that hasn't changed a whole lot. We're not seeing a lot of layoffs. Companies are still holding on to workers. Now, the continuing claims rise just suggests that it's taking a little bit longer for people.
The Fed also notes that federal government debt rose at a 6.3% annualized rate for Q2.
That companies say they're not really hiring either.
So the issue in the labor market is that companies aren't hiring as much. The job growth has slowed down, but the layoffs haven't picked up in a material way that really is alarming to policymakers.
It doesn't seem to be a reason for them to panic yet, but they're cautious. That's why they don't want to hire anymore. Some say they're seeing additional orders, and others say orders have sort of slowed. And there's both the Fed out there as an issue and the election out there as an issue. And some people suggesting that maybe companies, they're just going to wait to make expansion plans until after the election. They see what the tax and regulatory regime is.
That may take a while to sort out. Very quickly here, what other data point will the Fed and therefore markets fixate on before the meeting on Tuesday and Wednesday?
Well, really isn't a whole lot. Tomorrow we get the University of Michigan, and so we'll take a look at their inflation expectations numbers. They don't move very fast, but if they do move in the wrong direction, that might give people a reason to push one way or another on how many rate cuts we get by the end of the year. But beyond that, there's nothing till Wednesday to get excited about.
And you'll be heading down to Washington to cover it all for us. Mike, thank you so much. Bloomberg's Michael McKee, our international economics and policy correspondent. All right, let's continue this conversation now and look at everything from a credit perspective, especially when it comes to the economy and what the Fed does next. Joining us now is Winnie Cesar. She is Global Head of Credit Strategy at Credit Sites. She has a 25 basis point expectation for the Fed's meeting next week in terms of the size of the cut. Winnie, we're talking about traders pricing in this 25 basis point cut in September, but 100 basis points in cuts for this year. So that means that this cutting cycle begins next week with a fairly modest decline, but the next two meetings will feature one that will be a bigger cut, like a 50 basis point cut. Does that sound right?
We think that that is a little bit too dovish still. We have been in the camp to expect 75 basis points in total of cuts this year, really for quite some time. And we've tried to stay true to that most of this year, as the recent economic data still do highlight the reality that we have to balance the inflation mandate with the labor mandate. And while we have absolutely seen some signs of erosion within the labor market, we're not seeing this spike in layoffs or hearing from companies that they're planning to do broad-based layoffs, which I think leaves the Fed in pretty comfortable position to ensure that they're not easing too much too aggressively to restoke inflation, which still seems embedded in the services side of the economy.
All right, thank you for giving us that perspective. You mentioned hearing from companies. We heard from a group of banks earlier this week at the Barclays conference. I want to get your thoughts on what's been fairly cautious commentary. The headlines include JP Morgan saying analysts are too optimistic when it comes to its expenses and net interest income. Goldman Sachs warning that trading revenue could drop 10% this quarter. What was the most concerning thing that you heard out of that conference?
So I think that from an equity perspective, some of the comments were absolutely concerning. And taking a step back, we have been telling our investors within the credit universe that right now, corporate credit, especially investment grade, also high yield, looks really quite attractive relative to equity yields, as we were a little bit suspicious about forward earnings expectations on the equity side of things. And I think that the comments from the financial services conference really highlight some of that caution that we've had around forward expectations, which have been really quite bullish overall, versus the reality that if the Fed is cutting, they're probably cutting for a reason, seeing some normalization or deceleration in growth, especially on the consumer side of things. And I think that we all know when the consumer complex starts to slow down, that really spooks the market, because effectively a consumer slowdown is the big thing that potentially could drive an ultimate recession and layoffs and a rise in the unemployment rate. That's clearly not our base case scenario, but we do sometimes think that the market tends to overreact to consumer data. And we think that maybe that is part of what we're seeing on the back of the commentary at the financial services conference.
You said that this is concerning for equities, and certainly look at the KBW Bank Index of the bank stocks. It's fallen in 7 of the 8 trading days of this month, down about 6% this month. This comes as even as regulators, the Fed specifically, have signaled that they'll ease up on capital rules, cutting in half the proposed 19% hike in capital. Is there any reason to worry that these revised rules are tough enough for worst case scenarios for the longer term?
So our banking team has been pretty constructive on the revised rules. And as we've seen really for the past few stress test scenarios, most of the banks in general have done a pretty good job of passing those stress tests. It's always important to, understand what are the factors driving them. But when we take a step back and we look at the fundamental health of the banking system, especially the biggest banks, the regulatory scrutiny and requirements is still very, very strict. Now, when you start to move down into some of the smaller banks, into the category 4 banks, it's a little bit of a less strict regime. But in general, we are not super worried about capitalization and fundamental credit health of the banking system. It's just whether that equity upside is still there, I think is what the market is looking at right now.
All right, great wrap up there. Winnie Cesar is global head of credit strategy over at Credit Sites. Thank you so much. Coming up, the European Central Bank announcing its latest rate cut. Christine Lagarde offering insight into what the ECB is expecting for the year ahead. We've got more details. This is Bloomberg.
Another ECB sources piece, an October rate cut is unlikely for now. A move before December would take exceptional negative growth surprises.
AI, how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape in fashion?
Yeah, AI definitely helped. When I did the jewelry, I used the AI, helping me to give some idea. But ultimately, you still have to do a lot with it. To just give you very superficial ideas, and but at the end, you still have to customize it, how to really make it and do that. I do not think that AI and the technology can replace the human mind at this moment. Yeah.
Are you concerned one day we won't be able to differentiate designs by AI and designs by an actual designer?
I don't know. For me, I see that, when a designer doing it's the spirit, it's the heart that the computer don't have.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Markets. I'm Scarlett Foe. Now in Europe, the risks are to the downside and some factors could hinder growth going forward. That's according to ECB President Christine Lagarde. She spoke in Frankfurt after the central bank cut rates by an expected 25 basis points.
The risks to economic growth remain tilted to the downside. Lower demand for euro area exports, owing, for instance, to a weaker world economy, or an escalation in trade tensions between major economies, would weigh on euro area growth.
For more, let's check in with Lizzie Burden of Bloomberg News, and she joins us live from Frankfurt. So Lizzie, this was the second rate cut this year. Did Christine Lagarde say anything regarding the outlook in terms of future rate cuts versus what the market is pricing in right now?
Well, it's all eyes on the October meeting, Scarlett, and it's interesting, notable that they've cut the growth forecast for this year and next, but they haven't changed the forecast for inflation. And on top of that, at the press conference, as you heard there, Christine Lagarde saying that the growth risks are tilted to the downside, but there wasn't any sort of bias mentioned when it came to inflation. So you could interpret that dovishly, and yet at the press conference, Christine Lagarde had every opportunity to signal that an October cut is coming, or to rule it out. And if you think back to the June cut, think how clearly she telegraphed that that was coming. Some would say she over-telegraphed that. So perhaps she's been burnt and learnt her lesson from that. Our team in Frankfurt have just reported that the ECB Governing Council members aren't ruling out an October cut yet. So they're sitting on the fence. She's sitting on the fence. She was all about leaving it data-dependent, meeting by meeting, not a predetermined path, not fixated on a particular data point. And you can read into that. Before the October meeting, there is not a lot of data coming.
Yeah.
And that means when we get the inflation reading, if it goes down, don't read into it too much because it could go up again before the end of the year. So for now, traders have pared their bets on October, but this is what economists expected anyway. We may have to wait for Santa to bring another move to Frankfurt.
Okay, so she was careful not to tip her hand in any direction, it sounds like. Unlike the Federal Reserve, the ECB is a single mandate central bank. It fixates only on inflation, doesn't think too much about employment the way that the Federal Reserve does. So when she says that the ECB is data dependent, what specific data points, Lizzie, would you be paying attention to the most?
But that's exactly what she doesn't want you to do. She doesn't want traders to overreact to every single data point. She's trying to avoid this volatility between now and October. But of course, we're going to be looking at wages and inflation, growth. The question is, what are they focusing on more? Is the reaction function focused more on growth than inflation? But at the moment, she's trying to keep all the cards close to her chest and say, there is not a predetermined path, hence why economists see them sticking to this cadence of quarterly cuts of a quarter point each and getting to 2.5% by this time next year.
All right, Lizzie Burden, thank you so much for the wrap-up from Frankfurt. Now coming up, home prices in the U.S. proving to be a major issue across the country, including for the upcoming election. But you look at the New York City market, it is showing some signs of cooling. We've got a closer look at housing next. This is Bloomberg.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race. And Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank,
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu. As this week's U.S. presidential debate showed, there is increasing urgency about a housing crisis in the U.S. Home ownership affordability has now fallen to its lowest since 2006. That reflects still elevated borrowing costs, as well as a severe supply shortage. Our next guest says he can't remember the last time the cost of housing was a top-tier issue in a presidential election. Let's bring in Slate Property Group co-founder and principal David Schwartz, along with our Abigail Doolittle. Slate develops and invests in $8 billion in real estate, mainly across New York City. Thanks so much for joining us today.
Thank you for having me.
So each candidate has proposed their own solution to address housing. Kamala Harris wants to give builders tax credits to increase supply and $25,000 payment assistance to certain kinds of buyers. Donald Trump wants to reduce regulations and open up federal land for housing development. Talking about New York City, would either of these solutions do anything? Would they move the needle for a market like New York City?
Yeah, thanks for asking. I think really the important thing there is we have a supply side issue. So when we really think about it, we just don't have enough units. And I think that's been going on since the GFC. So we have to figure out how do we build more units, whether it's in New York. We all know as New Yorkers we need it, but if we're in North Carolina, we need more units, Florida, California, everywhere in between. This is a nationwide issue and it needs a nationwide solution.
So how did we get here? How did we get to this point where affordability for the first time in your memory is a major focus within the presidential election cycle?
I think it's been going on for some time, but really after the GFC, we stopped producing units. We just don't produce. I think it's about half as many units a year. So we really got shot.
Why is that, though? So is that just developers getting gun shy, or the financing wasn't there?
Yeah, the financing fell apart a lot. We saw what happened with the subprime. I think there was less money in the system, more regulation, and I think we produced a lot fewer units. And a lot of the units we really produced were at the super high end. So we missed a lot of the affordable kind of units.
Right, that doesn't address the affordable housing shortage. So, of course, there are a lot of commercial buildings that are no longer really in use, given that so many people are working from home. What about the effort to redevelop those buildings, those structures, into affordable housing?
Yeah, great point. So we're actually working on the first hotel conversion to 100% affordable housing that we're doing in Queens. So we're excited. We're going to build about 318 units of 100% affordable housing and really focusing on people that really need it. We're talking about everyone from teachers and firefighters down to fast food workers. So everybody that needs affordable housing we're going to have there. And the key there is we're going to produce those units really quickly. So if it takes if it takes about 3 years to build a building in New York, we're going to do it about half the time.
So just today, information came out that rent at the overall median price, at least here in Manhattan, it's come down. But it's come down to just above $4,300, which is probably more than the mortgage for most people in the suburbs or other areas. So that's the price at the super high end that's come down. What is the price for these affordable housing units that you're talking about, say, for the teacher or the fireman, somebody who's not making a six-figure income?
Yeah, those prices, we're going to be less than $1,000, $1,000, $800, $700, really prices that people that are working people can afford. I think one of the problems is that if prices come down at the very high end, it only helps those at the very high end. But $4,200, $4,100, even if it goes down to $4,000, it's not going to help the teacher afford a place to live.
How many units are we talking about here, though, when you talk about redeveloping this building? I mean, it's not enough to address the bigger problem, which is there simply isn't enough homes.
Yeah, we have 318 units there. Again, it's the right start. I think this is something that we can take and do across the country. So I think it's a start. We need 3 million units, and I think we're talking about 3 million units is a good start, but that's not going to get there. But we got to start with 300.
Sure. When it comes to rezoning properties from commercial property to residential property, I know there's a lot of costs involved, right? You have to rezone that, and there's administrative costs. But what kinds of infrastructure costs are most people not aware of, that, including perhaps policymakers when they say, let's do more of these big ideas?
Look, there are lots of costs. The problem is it really is very localized. So all the local areas
in New York,
have different.
for instance.
In New York, actually, the zoning is better than in a lot of places. And we have this new proposal for the city of Yes, which is going to make it easier. So that's something that's been proposed by the local administration. And that's just going to make it easier to build affordable housing and more cost effective.
So, David, we would be remiss if we did not mention the fact that your father is gridlocked, Sam. And of course, congestion pricing this year has been a big, big deal in New York. It was supposed to be implemented, $15 between 96th Street going on down, I believe, to 14th Street or below. And then at the last minute, Governor Hochul stepped in and said, no. I've heard more recently that they're maybe thinking about putting in some milder version of it. What does that mean for New York City businesses? Do you absorb that money that the MTA needs, and is it passed along, or where does that go or come from?
One of the greatness of New York City is our mass transit system. So we have the greatest mass transit system, but it's aging. We need more money. We need investment to that mass transit system. That's what makes New York work. Sitting in a car all day in Midtown Manhattan, I'm sure you could imagine, is not efficient. So,
but will those costs? Because right when that we had another real estate guest on set with us that day who was talking about the idea that at some point New York businesses would actually absorb those costs because it wasn't going to be coming through in the congestion pricing. Do you agree with that? That somehow it will be passed along in some other form?
I don't know the specifics of that. You could ask my dad. I'm sure he knows better on that.
Your dad, of course, being gridlocked, Sam, the former New York City traffic commissioner. So you've grown up with this instinctive awareness of public transportation and transit that perhaps most developers don't necessarily have. I'm curious, when you think about congestion pricing overall, if it were to go through, is this something that's a selling point for people who want to live in New York versus other markets?
I think it'll make New York operate more efficiently. I think we're seeing traffic as a big issue, but also if you look at affordable housing, how do people get to their job? How do they get to work? So people are not living in Midtown Manhattan because the prices are $4,100 a month. So if people are commuting, mass transit's really a big part of their life. And if we want to add millions of people or hundreds of thousands of people to New York, where are we going to add them?
So we had your co-founder and principal, Martin Nussbaum, with us just a couple of months ago. Very quickly, David, I know that your financing business has picked up. Are you providing a lot of shadow banking in the real estate area?
Yeah, we are. We've seen that one of the things with the local banks having more regulation and closing down, there's a shortage of money. We need to produce a lot more units, and in order to produce lots more units, we need money. So we're filling the void where people don't have access to capital that want to build more units. We've financed thousands of units of new construction, affordable housing, and market rate housing. We need all of it. So we're really happy to be filling that void as lenders and filling the void as developers.
All right, Slate Property Group co-founder and principal David Schwartz, thank you so much for joining us today.
Thank you.
And of course, to our very own Abigail Doolittle. Now, coming up, we're going to dig further into the data we got today and what it means going forward for central bank policy. This is Bloomberg.
I think that it would be irresponsible for us to ignore the AI revolution. I think that as much as there is a lot of short-term hype, I think long-term it has the potential to be transformative. And so we are spending a lot of time thinking about what elements of it are structurally have barriers to entry, and so there is a winner-take-all element to that and which don't. And it seems to me that things like chips, things like infrastructure of, and systems has a little bit of that, because NVIDIA is so far ahead, it's expensive to catch up. There's, the technology that it requires to build these chips are sort of based in Taiwan. What we're seeing is that some of the apps and some of the applications, there are no barriers to entry, right? Like, it's fairly easy to come up with, and I don't mean to belittle the complexity of it, but they're not moats around those things like they used to. So I think that there is less of a winner take all in that space. You're gonna have to earn that spot, whereas it'll be fun to watch what happens. And I think there's gonna be a lot of money burned in the process, because somebody will develop something and a fast follower will come along and make it better and cheaper, because data gets cheaper and more pervasive, and it's gonna be easy for new players to come in and do interesting things. So I think we wait and we see.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome to Bloomberg Markets. I'm Scarlett Food. Let's take a look at where things stand across the financial markets at midday. You have the S&P 500 holding on to a gain. It's not very large, 0.1%. This is even after the latest economic data showed faster than expected price increases across the wholesale industry. So inflation coming in a little bit hotter than anticipated. There was also weekly jobless claims, which indicated a pickup in the number of people filing for first-time unemployment. That just cements traders' bets that we're going to get a 25 basis point rate cut next week. Within the equity space, you're looking at small caps doing better. The Russell 2000 gaining 0.8%. And there are mild losses across the Treasury curve. The 10-year yield moving up just a bit by 4 basis points to 3.69%. And worth noting here, gold is at a record high, $25.45 an ounce, up by 1.4% at the moment. Now, when it comes to that inflation data I was just referencing, PPI, the Producer Price Index, Stifel's Lindsay Piegza says the numbers should keep the Federal Reserve on its rate-cutting path.
This morning's slightly hotter than expected read on the PPI, it's not enough to negate the Fed's intentions to open the door for rate cuts next week, but it is a welcomed reminder of the Fed's ongoing focus on inflation, as price stability is not yet met.
For more on what's happening across the U.S. economy, let's bring in U.S. economist at HSBC, Ryan Wong. So, Ryan, when you look at the two data points that we got today, which one is more critical to how the Fed determines its next move, the start of the rate-cutting cycle? Is it the PPI print or is it the jobless claims print?
Yeah, I think that's really interesting how you frame that. And thanks for having me. Look, I think we've gotten very trained in markets over the last few years to be paying intense attention to these inflation numbers. So it's, every month it's the CPI and then the PPI. Sometimes it's the other order. And we've been watching it closely because inflation has been so high and because these two reports, the CPI and the PPI, are key inputs into the Fed's preferred measure, PCE inflation or core PCE inflation. However, what I think we've seen in recent months is that core inflation is now below 3%. It's not quite as critical as it has been over the last couple of years because we're still wondering, and the Fed is concerned with getting inflation back to 2%, but the bottom line is it's much lower than it was 1 or 2 years ago. That, in turn, I think, has turned attention to the labor market. And a key reason the Fed is likely to start cutting rates next week is because of evidence of softening labor market conditions. Now, actually, this is a nuanced story because the initial jobless claims readings have been relatively benign over the past 5 to 6 weeks. I think that's giving the Fed the confidence to cut rates, but to do so with an incremental 25 basis point step.
Right, but everyone talks about how the labor market data is backwards looking. It tends to be a lagging indicator. By the time it really shows there's damage across the labor market, it's too late because it's already happening. When it comes to jobs right now, is the picture really that companies are no longer hiring at the pace they once were, so the growth in employment has slowed down, but there's not necessarily a material pickup in layoffs and firings? So that kind of gives everyone room to wait and see, but the wait and see carries a lot of risks, doesn't it?
Yeah, I think once again you put it exactly right, meaning the initial jobless claims that we get every week, it may be one of our best leading indicators, but that doesn't mean that it's going to give you much advance notice if, in fact, the U.S. economy does at some point head into a clear recession. So that's kind of the issue. I mean, it's the best of a bad lot, if you like, in terms of what signals we can really look at to determine what's going to happen in the future. I think that's clearly why over the course of the summer there was such intense focus on those jobless claims figures. In late July, we had an elevated reading. As I mentioned, the last 5 or 6 weeks have been lower, and that's pretty much all we have to go by. I do think, broadly speaking, both the numbers that we have in hand and what companies are saying supports the characterization that you just made, which is that, look, businesses just aren't hiring as much as they used to because they filled a lot of those previously open positions. I mean, it's the most logical thing in the world. So that is leading to slower net employment growth. Mm-hmm. It's not necessarily something to be overly concerned with, but then again, markets are probably right to think, look, if businesses have reached the desired level of employment, then what is the next step? And, we're going to be, I think, just waiting for the rest of this year and into next year, always a little bit concerned that the next step could be outright reductions in desired workforce.
Right. I like how you put it. The jobless claims being a leading indicator is perhaps the best of a bad lot. The thing is, no one really makes a determination on conditions in the labor market based on weekly jobless claims, do they? Because that would be incomplete. What is it about the jobless claims that perhaps doesn't give us the fullest picture of the labor market here in the U.S.? I've read that it doesn't necessarily capture everyone. For instance, recent immigrants who can't file for unemployment benefits.
Well, I think there's some ambiguity about that. I mean, from a historical standpoint, again, jobless claims have a very strong empirical record in the data. Of course, there's so many things that are unusual about the economy today that, yes, there's always questions about what should we be looking at, and hence, we really know the Fed is looking at it using a dashboard approach to looking at the labor market indicators. For example, it wasn't just the most recent jobs report last Friday, but also the job openings and labor turnover survey that we know Fed policymakers are watching closely. So you look at metrics like gross hiring, right? Not net hiring, but how many millions of persons overall are actually being hired into new positions every single month. And that number has been slowing and has now fallen below comparable levels seen in 2019. And so for the Fed, the policymakers are thinking, okay, it's been useful in the fight against inflation to have labor market conditions cool, but wait a second, are they now cooling too quickly? Right. So I think that's the push and pull. There's also metrics like voluntary turnover, quits, and we know that is something that correlates pretty well with wage growth. And so, yeah, I think it's really a dashboard approach, and there's really no clear answers.
Yeah, I mean, when it comes down to it, investors are just desperate looking for any kind of data point to hang their hat on and give us an answer for what the Fed does next moving forward, kind of like a blueprint. When you look at what's on the economic calendar, Ryan, before the FOMC makes its decision next Wednesday, it does look like we have University of Michigan consumer sentiment. That's a survey, so it's kind of a soft data point. You also have retail sales next week. Will either of these move the needle at all for policymakers?
Yeah, I think, the main factors that are driving Fed policymaking are directly related to the labor market data and to the inflation data, and that's no surprise since that's really the Fed's dual mandate. However, I do think the retail sales figures and their impact on the GDP data and the calculation of how GDP growth is really progressing in 2024 is still relevant. although there have been signs that companies are hiring less, you really haven't seen any significant weakness in the GDP data, actually averaging still over 2% real economic growth in the first half of this year. Signs that the third quarter, based on what evidence we do have, is remaining pretty resilient. So, I think for a long time, several years, really the entirety of this after the pandemic economic period, there have been concerns that consumer spending would weaken, that retail sales would fall. Well, evidence of that has been very scant, right? There's been a lot of expectations that we might see a downturn in spending, but it really hasn't happened. So I think we're just going to have to keep waiting and watching. In a way, I think that wage gains and still slower but still positive employment growth are supporting spending, right? And so once again, it may be premature and just a little bit too looking too far into the future to think that the retail sales figures are going to deteriorate in a very significant way.
All right, really good perspective. Ryan Wong is economist at HSBC. Thank you so much. And just a reminder that we do have University of Michigan consumer sentiment numbers due out tomorrow at 10 a.m. New York time after the market opens. And then the following week on Tuesday, we have retail sales, and that is, of course, day one of the Fed's policy making meeting. Coming up, midnight tonight in Seattle, Boeing factory workers could begin a strike. We've got the latest on the turbulent labor dispute next. This is Bloomberg.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This This is Bloomberg Markets. I'm Scarlett Fu. Let's head now to our stock of the hour, and we're focusing on Boeing because union workers are tonight set to vote on whether to accept the terms of a new agreement with Boeing. If they do not agree, a strike is expected to begin at midnight in Seattle. For more on this, let's bring in Bloomberg's Sid Phillips. So, Sid, what do we need to know about the terms of this potential deal that's going to be voted on?
Yes, Boeing and the union hashed out a deal over a month, and essentially last weekend they came up with the proposals that would basically give the workers a 25% pay hike over a 4-year period, as well as other benefits. And essentially the workers have been asking for more, and essentially they're saying that's not enough. And given the fact that this is the first full-scale negotiation that Boeing's had since 2008 for a labor deal, this is sort of a pretty big moment for the union. And so the union's the workers have basically the union's been saying this is the best deal that they could get, given that Boeing's in a precarious situation at the moment. And the management of Boeing has said that this is the best they can do, especially in the circumstances when the company is going through a rough period. They've struggled with free cash flow, they've struggled with raising money, and essentially this will act as a massive disruptor to Boeing's production and potentially crimp that ability for them to be able to add more cash and essentially dig themselves out of the hole.
As much of a struggle that Boeing's been in, there's a lot of demand for its aircraft. And I guess part of the deal includes building Boeing's next plane in the state of Washington, which is what these union members are concerned about. Is there an explicit effort to sync up the timeline for the next plane with the terms of this new labor agreement?
So far, there hasn't been. So far, they've been talking about if they decide to build a new plane in the next 4-year period, then it will be built in the Seattle area. So there hasn't really been any definitive moves towards building a next generation aircraft. I mean, there has been a lot of speculation that they will have to do it, but so far there hasn't been any sort of tentative signs from the Boeing management about them building a new plane.
All right, Sid, really appreciate your giving us the broad brushstrokes of this deal that, of course, is being voted on today. Bloomberg's Sid Phillip. Let's now get the sell-side view on Boeing with Jefferies Managing Director of Equity Research, Sheila Kayalu. So, Sheila, Sid told us about what is in contention, the sticking points here. Who has leverage here?
I think they're both actually in a really good place. I think Boeing and the union have come extremely close, faster than anybody anticipated. And the headline number is 25% of a cumulative raise over 4 years, but really it's around 33%. We were looking for a 40% raise overall. So we were factoring in about $1.1 billion headwind to free cash flow. This comes out to about $900 million. So we're not that far away. There's a few other sticking points like a ratification bonus, AMP, but I think Boeing and the union are a lot closer than one might think.
What is the likelihood that this will get through? Because I've seen research reports that indicate, it's still not a complete certainty that this will get approved, and we could see a strike.
Yeah, I think we could see a strike, but I think it'll be very short-lived. We won't go back to the 2008 strike of where we had over 150 aircraft missing deliveries in 2008, about a $2.5 billion up profit. Pull out of that. I don't think we'll see that. I think we could go to strike for a few days, and by Monday morning, this will all be resolved. That's our in-house view, at least, because I do think that they're so close to getting there, essentially 33% to 40%, and maybe a bonus or two to change things around.
So once union members pass this new labor deal, Boeing can kind of breathe a sigh of relief and move on to the next thing. And Sid had mentioned some cash flow problems. Boeing is in a position to have to improve its financials. Do you expect a share sale or some other kind of fundraising effort?
So yes, there's a lot of catalysts to get Boeing into positive territory. This is just step one and a baseline, to be honest, to get your workforce to come to work. And they're not the only person that's dealing with this. We've seen the airlines that go through it. We have some other companies as well that have looming strike deadlines in the month of September.
We'll get to that in a moment.
Yes, totally. But in terms of Boeing, Q3 is going to be another outflow, essentially in line with what we saw in Q2. Free cash flow outflow, let's just call it $2 to $3 billion among friends. That's some of the defense losses and low production on the MAX. We're looking for monthly deliveries to start to tick up. They've been in the 30s, production in the low 20s. That's an okay rate. It's not great, but as that ticks up, that should be helpful. Defense losses is the second thing we're watching. So lots of catalysts to get Boeing into positive territory. And you asked, what about the cash? Well, when you have $57 billion of debt on the balance sheet, cash is always going to be an issue. They have $12.5 billion of cash on the balance sheet at the end of Q2. Of course, they're burning $3 billion, so that gets you into $9 billion. And it's not a great place to be, but they don't need to access the equity markets. But as new CEO Kelly Ortberg has taken hold, I think to fund the Spirit deal, to go forward, I think, a little extra cash on the balance sheet never hurts.
I'm glad you bring up the new CEO, Kelly Ortberg. How much credit does he deserve, or how much blame does he deserve if the deal goes through with the union members or it doesn't go through?
It's interesting you say that, because a plug for our Jefferies Industrials Conference, which we just hosted last week, and a lot of management teams don't actually meet with the union. And that was something Kelly did last week or 2 weeks ago now, where he met with the union, and it was the first time since 2008.
He was at the negotiating table.
Yes, since 2008 that a management team from Boeing has done that. So that's what we know about him from his days at Rockwell Collins. He's a good listener, so clearly that's coming through. I don't know if he's responsible for a deal. I'm sure there's many, many parties negotiating it nonstop, but he does seem to have a nice touch.
Speaking of companies that are dealing with labor strife, I want to talk about Air Canada too, because it's now asking Canadian Prime Minister Justin Trudeau to intervene in contract negotiations with its pilots. This is a labor negotiation that's in a different place than what we've seen with Boeing and its union, isn't it?
They have a looming strike deadline on Sunday, September 15th. So they've been in negotiations since June of 2023, and it's been going on a while. And we don't know what the public wage numbers are, that they haven't been made public. We actually just hosted their union on a call yesterday. It seems like, they're not disclosing those numbers. So we could see a strike happen there. And Air Canada is the dominant carrier in Canada.
It's a flag carrier.
So there's not many places to go for pilots. They're in slightly a different bargaining table than I would say Boeing's employees are.
Yeah, how are you thinking about this in terms of how you recommend these companies as potential equities to buy, sell, or hold to clients?
We continue to have a buy on Boeing, given the duopoly that it's in, and if it could get its act together in terms of deliveries, clean up the balance sheet, maybe even divest some parts of defense that are dilutive to their cash profile, we think it's a great asset. We continue to love the aftermarket names. Those are names like HEICO, FTAI, GE, that have just really been huge beneficiaries of the lack of deliveries. So older planes staying on longer means aftermarket dollars at 30% margins plus come through for those names, and they've been hugely positive. These companies up close to 100% over the last 12 months. So that's kind of how we're driving our recommendations.
Sheila, thank you so much for joining us. Sheila Kayalu of Jefferies on what's going on inside Boeing. Coming up, big pharma giant Johnson & Johnson working to maintain its status as an innovator for medical technology. We're going to hear from the CFO about overcoming headwinds from government regulation. This is Bloomberg.
Names that move markets are on Bloomberg.
I am a huge believer in trade. I believe that the benefits, the dispersed benefits to American consumers of trade are huge and important, and we've all enjoyed them. What is true is that the Chinese economy is doing something strange. They are leading the manufacturing of almost every clean energy product: wind turbines, solar arrays, batteries, EVs. But what's also true is they're by far the biggest polluter in terms of carbon emissions. And they're using their carbon emissions to try and drive their economic program of leading this energy transition to pull their very weak economy out of the ditch. So in fact, the idea that they should be charged for their emissions that are about a third of global emissions makes very good sense to me. And we're doing it in a not direct way, but it's actually a way that turns out to be pretty fair.
Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
So just less than 10 minutes time now at the top of the hour. US is due to sell $22 billion in 30-year bonds. Prior bid to cover was 2.31, prior high yield of 4.314%.
Law is not helpful helpful to innovation. That is according to Johnson & Johnson CFO Joe Walk. He is the focus of the latest episode of Bloomberg's Chief Future Officer.
So today's $22 billion sale of 30-year bonds, set to draw the lowest yield in more than a year, will put investor appetite for the duration to one last test this week, after a 3- and 10-year note sales drew strong demand. JP Morgan strategist in a late Wednesday note said that demand for the duration and curve steepening should help the auction results. Also making note of the latest CFTC positioning data, this shows speculators were net short 33,000 bond futures and 240,000 ultra bond futures, possible sources of covering demand.
Any of the losses that we have for maybe a few of the products that are subject to that new regulation. I think a company like Johnson & Johnson will be able to continue being successful in the context of the Inflation Reduction Act, but the number of medicines that will be there will be less, just because less investors would be putting money into developing new medicines. So I think that that's the ultimate effect. It's going to be less attractive for investors to put money there. Fortunately, as we are globally diversified, and we have also the diversification of having medical technology and pharmaceuticals, is something that we think we can navigate better than any other company.
Joining us now with more on J&J is Bloomberg News reporter David Gura. So, David, you sat down with both those gentlemen back in June, the CEO, Joaquin Duato, and the CFO, Joseph Walk. And, of course, they kind of inform each other in terms of how they strategize and how they think about building out the company. What did you learn about how those two men work as they try to bring Johnson & Johnson into 2024, into 2025, and for the future?
What's fascinating is how long the two of them have known one another. They both have kind of spent most of their career at Johnson & Johnson. So
they're lifers.
They're lifers. They're very familiar with one another and how each other works. And I think the beauty of the show, and what we try to get into in the episode, is that the role of a chief financial officer is changing so much. Yes, there's a huge component that has to do with quarterly earnings and the balance sheet, but it's a much more strategic-driven role than it has been in the past. And so they have this complementary relationship with one another. And Joaquin Duato is saying he really relies on Joe Walk for his sense of where the company should be headed. And I should say, most recently, this is a company that split in two just last year. It was only a couple of years in the works. So now you have its kind of personal care business on one side under the name Kenvue, and then the other side of the business is dealing with medical technology and pharmaceuticals. So it's entering this new phase of its existence, and that's something that Joe Walk, from a financial perspective, was so integrally involved with and worked hand in glove with Joaquin Duato on engineering that whole thing.
So in many ways, the company is a lot simpler than it used to be, right? You've got Band-Aids on the one side and then drugs and technology on the other side. Of course, the split up is something that makes things easier for investors to value, but then at some point, companies need growth, and that's where M&A comes in. Did either of them talk about what kind of deal making they're at least taking a look at or thinking about or wanting to pursue?
Talked a lot about that. I mean, this is a company with a very solid balance sheet. It's been around for a very long time and has a very good credit rating, AAA credit rating. And it's been doing a lot of M&A despite the fact that we've been in this environment where rates are quite high and one would think it would be a little bit trickier. But they're thinking a lot about the patent cliff in particular. Yes. So, you've spent a lot of money on research and design.
In 5 minutes time now, at the top of the hour, US is due to sell $22 billion in 30-year bonds. Prior bid to cover 2 spot 3.1, prior high yield 4 spot 3.14%.
As a result of that, to try to get around that, and that's just one of the many kind of novel financial considerations they're having to spend more time focusing on now as the kind of pharmaceutical environment generally is changing.
What was the most interesting thing you learned about J&J?
How it all works together. So yes, they've kind of cleaved the consumer products business to one side, but the way that kind of innovative pharmaceutical side works with medical technology and how they're looking at something that we talk about so much, and that's the advent of generative AI and all that promises. I mean, something that Joaquin Duato told me that's really stuck with me is that the advances that we're going to see in healthcare in the coming 10 years are going to exceed what we've seen over the course of the last 100 years. Just what AI and its promise could deliver for pharmaceuticals in terms of not production and things like that, but in research and trying to more effectively find drugs and medication that will be efficacious and that they can bring to the market faster. I thought that kind of, both of them and their willingness to kind of enter a world that they hadn't been a part of before, that kind of design and innovation was fascinating.
So changes are coming, they're coming at warp speed.
They are, and it's it's nice, and in the context of a company that's been around for a long time, it's nice to hear them talk about that.
All right, fantastic stuff. Thank you so much. Bloomberg News' David Gura, and the latest episode of Chief Future Officer featuring J&J CFO Joe Walk is available right now on Bloomberg.com as well as YouTube. I'm Scarlett Fu, and that does it for Bloomberg Markets this hour. This is Bloomberg.
According to an Ipsos poll, Harris leads Trump 47 to 42%.
The top names in business are on Bloomberg.
It's about category creation. You know, today we are a tea drinking nation. Tea penetration is 91%, 93%. We are at 25% of the affluent class. We are at 14-15% of the overall market. I'm confident that if we continue to do what we are good at, in terms of the Starbucks experience, in terms of the coffee expertise, in terms of localizing and innovating, we will get our consumers.
Nobody covers business like Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The Russell 2000 index rises 1% now. S&P up around 0.4%.
What did you say to your mother and father when you said, I'm dropping out, despite the fact I said I wasn't going to drop out?
Well, I said I'm just taking some leave.
Oh, leave?
Yeah, I think I'm still technically on leave. Harvard has kind of a funny relationship.
How long can you be on leave for? 10
1 minute
years?
remaining.
We're going to find out, yeah.
So at the top of the hour, do you see the release of the 30-year when issued pre-sale yield? The auction results normally follow a couple of minutes after this.
This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Jobless claims pick up, so does wholesale inflation. What does it mean for the race? Welcome to the fastest show in politics with fresh data in the air today, just as the campaigns Harris and Trump get back on the road. We'll talk about the data with Enda Curran, Bloomberg Global economy reporter, and dig into politics, not just the trail, but here in Washington with lawmakers back on Capitol Hill. Nicole Austin Hillary, who runs the Congressional Black Caucus Foundation, will join us live.
Treasury pre-sale when issued 30-year yield 4.001%. So again, the pre-sale when issued yield 4.001% ahead of this auction.
Strategist Rick Davis alongside Kristen Hahn, Democratic strategist from Rock Solutions. And it's all after a look at Wall Street. PPI Day, how's it playing? Charlie Pellet in New York.
Indeed, Joe Matthew, all of a sudden another move higher for the Dow Jones Industrial Average, S&P 500 Index, NASDAQ solidly in the green right now, right to the numbers. We got a rally underway with the S&P up another 25 points today, up 0.5%. Best level of the day with the Dow up 105 now, up by about 0.3%. NASDAQ ripping higher by 123 points. The NASDAQ Composite Index up 0.7%. NASDAQ 100 Index up 0.6%. A broad-based rally with the Russell 2000 up now by 1.1%. 10-year at 3.69%. The 2-year 3.68%. Spot gold advancing $39 the ounce to $25.51, up 1.6%. West Texas Intermediate crude oil up 3%. WTI 69.30 a barrel. Members of Boeing's largest union are voting today on the first comprehensive labor agreement in 16 years. Right now we have got Boeing shares advancing by 0.5%. Delta says it expects its full-year profit to be at or above the midpoint of prior guidance. Delta shares are rallying now by 1.3%. Also this morning we had Alaska Air Group boosting its outlook for third quarter profit on strong summer demand and lower than expected fuel costs. Alaska up now by 1.3%. New York Mayor Eric Adams has named a former FBI official as interim police commissioner following Edward Caban's resignation. Caban resigned today a week after it emerged that his phone was seized as part of a federal probe that touched several
Bid to cover issue 2.38, 2.38. High yield 4.015%, 4.015%. So the US sells $22 billion in 30-year bonds and awards 55.44% of bids at high. Primary dealers take 15.66%, direct 15.66%, and indirect 68.68%.
As we dwell on data once again today, I shouldn't be negative. Some people like what they're seeing here, obviously, but we have a couple of data points that really helps to start filling in the blanks of the conversation that we're having on the campaign trail and what will be the state of the economy, not only when the Fed meets next week, but when the next president moves into the White House. Enda Curran, Bloomberg Global Economy reporter, is with us to look at jobless claims, PPI, both coming together, and in an interesting way today that, well, I guess underscore the idea that things are in fact softening.
Yeah, no doubt. Jobless claims rose by 2,000 in the week, up to about 230,000. That says two things, Joe. It says the labour market is continuing to cool. It is moderating. It's not as red hot as it was, say, a year ago. At the same time, though, it doesn't suggest that the jobs market is falling apart either. Yeah. So that's the good news part of the story. That all feeds its way into the idea that the Fed next week will have its opportunity to bring down borrowing costs for the first time in a couple of years. By how much is the big question. And then you also mentioned this morning we had producer prices, like the upstream prices that eventually feed their way into what we pay on Main Street. Producer prices rose a little bit due to services pressure, but nothing that would put the Fed off track for next week. So the producer price story doesn't suggest the inflation story is going in the wrong direction. It all points to a rate cut.
Fascinating. We were spending time yesterday talking about housing costs, which have become a big issue on the campaign trail. Do those stand to potentially rise when interest rates start to fall and the market starts to loosen up, people start bidding up houses again?
Well, this is the big push-pull question when it comes to housing. Right here, right now, the housing market is just jammed tight. People on a low mortgage don't want to sell their home. Young people can't afford to get into it, and rents are continuing to at least stay high, and that's where the inflation pressure is coming from. As you say, both candidates want to break that up. You have former President Donald Trump talking about releasing federal land, offering tax breaks to get houses built. Vice President Kamala Harris has her idea is to build 3 million homes and a $25,000 grant for some home buyers. But there is a scenario, yes, whereby low interest rates, maybe a bit more supply coming on, where there's a lot of demand out there.
Yes.
And it does only add to pressure in the mix already. So it's a fairly tricky one to get right, actually.
And people have been locked in place for some time, and they're itching to move in many cases. I've got my eyes on crude oil, something we don't talk about a lot, Enda, but it's a big part of the story here. We're up $2, West Texas, $69 a barrel. It's a 3% increase. And the real story recently has been lack of demand, right? This is an economic indicator, and it really has a story to do with China in many cases, doesn't it?
Oh, yeah. Look, the oil story, if you step back, at the start of the year with the Red Sea tensions and the blockages on shipping there, people thought oil was going to go through the roof given what was happening in that part of the world. It didn't play out like that. And to your point, it reflects a pretty sluggish global economy, China being the world's biggest oil importer. That's not, their economy isn't going anywhere fast right now. And remember, cheaper energy prices are a big part of the inflation story in the US coming off the ball the way that it is. We had inflation data yesterday showing a big tumble in energy costs. So even though energy prices might be picking up this week, there's still a good energy story, I think, when it comes to the US. And it looks like the world more or less dodged a bullet when it comes to given the tensions that there has been on the high seas this year.
When we start talking about next week's Fed meeting, what are we going to learn in this Q&A that we might not be talking about here? Is Jay Powell going to start speaking more about future cuts, about where we're going to be, for instance, the beginning of next year and further? We're having trouble modeling things right now. Congress is having trouble allocating funds for next year. What will Jay Powell tell us?
I think a lot, listen out for the urgency in his tone. Is he saying we can go by maybe 25 for argument's sake and we have time, let's see how things play out? Or does he suggest that, no, we've got to move in all the meetings ahead of us? So there's a lot in terms of the signaling there, Joe. But also don't forget, as you know well, there's going to be the whole political backdrop. He's on a no-win situation here. If he goes out and cuts rates, he'll be blamed by one side for getting involved in the election. And of course, if he doesn't cut rates, he'll be blamed by the other side. So there's an economic story that we can all break down the numbers, but there's a political story.
There's been a bit of a split here, though, right? Donald Trump is saying, don't you touch interest rates. That'll be seen as political. It's bad for the markets. But you've got a number of prominent Republicans, including Josh Hawley, I think, as senator, was the most recent, calling for a rate hike now.
Yeah, I've seen that. I mean, on the ground, plenty of businesses and chambers of commerce and people like that are saying they need relief, like the small business group saying we need relief for those who have loans with banks and the rest of it. So there's a big case out there for borrowing costs to come down. But to your point, if borrowing costs come down and then that gets linked to a lift in consumer sentiment, you can see how the Trump campaign wouldn't be especially happy with that.
That's true. It's all going to be about where we are, I guess, in November, although we've noted today, and the first absentee ballot, first mail-in ballots go out today, and Alabama, Pennsylvania will mail them out on Monday. So it's really the economy today that people are deciding on.
Yeah, it's extraordinary to think that votes are already being cast, Joe. So there's no doubt about it. I mean, look, right here, right now, inflation has come off the boil, and the jobs market is holding up. The Biden administration can claim that, but at the same time, the Trump administration has plenty of issues that they can campaign on too. So the economy is front and center.
Remains issue number one with the help of Enda Curran. Great to see you, Enda. Thank you so much reporting for Bloomberg. Here in Washington, I'm Joe Matthew on Balance of Power with politics in mind, but we want to stick with the intersection of politics and the economy, because you cannot have one without the other. And an important conversation that we can bring you today at an important event that's underway right now in Washington. The Congressional Black Caucus is having its legislative conference just a couple of blocks away from where I'm sitting. And Nicole Austin Hillary is the president and CEO of the CBC Foundation, and she's with us now on Bloomberg TV and radio. Nicole, thank you for joining us. We've been spending time talking about kitchen table stuff, as people like to say, in the world of politics. Prices, the strength of the job market, and the availability of housing. All of these are very important issues for your members and, of course, their constituents. As they say, prices don't have D's or R's attached to them. This is obviously a big issue for people no matter where they live. And Donald Trump is telling a story now that he says is more attractive to black voters, that he did more for black Americans when he was in office than Democrats have been able to do in lifting them up, finding opportunity, increasing wages. How do you see it?
First of all, I'd like to thank you for having us on the show today. Look, the annual legislative conference is 53 years old. This is our 53rd annual conference. And this is an opportunity for all of Black America, and in fact, all of America, to come together and talk about those issues that are most salient to the Black community. And we know that issues that impact the Black community impact all of America. All of those issues right now, economics, closing the Black wealth gap, dealing with disparities, housing, all of those issues are the most prescient issues right now for Black America. This is a time for everyday citizens to come to our conference, to stand next to members of Congress, to hear from them in panel discussions, to ask them questions, to stop them in the hallways, to tell them what's going on in their own communities. And that's why we exist. That's why we do this conference, because we believe that every individual person should be empowered to talk about what is happening in their communities and to impact and be empowered by their own communities and by the work that they are doing. So again, as you said, I love that you said this is not about whether you're an R or a D, whether you're purple, green, blue, or yellow. This is about individuals coming together, having an opportunity to hear from their elected officials and having an opportunity to question them, but also make recommendations about what they want to see, the kinds of changes they want to see in their own backyards.
Well, that's a productive conversation, and I'd like to get specific with you about legislative priorities here. But knowing that you were at a watch party, a CBC watch party, looking at that debate on Tuesday, did either candidate bring plans that resonate with Black voters and the people you're talking to today?
Well, I can't speak for all Black voters. The Black community is not monolithic. What I can say is that both candidates spoke to issues that are of concern to the Black community, and again, that are of concern to Americans writ large. They talked about the economy. They talked about immigration. They talked about housing. They talked about education, artificial intelligence, all of those things that to everyday average Americans is going to impact how they live, breathe, eat, sleep, how they take care of their families, how they take care of their communities. I think those were issues that everyone in this country has an obligation to be focused on, has an obligation to be thinking critically about, and has an obligation to then think thoughtfully about as they go into the ballot box in November and make their choices, their personal choices that they think are going to be most beneficial to them and their families.
Well, you just said a lot there, and I find it interesting that we're talking about AI as part of this conversation as well. Maybe AI is part of the kitchen table conversation. Nicole, you tell me, because Washington's trying to get its arms around this technology right now, and there is a civil rights aspect to this, isn't there?
Yes. Absolutely. And AI is something we're talking about here at the annual legislative conference. You know, we have over 100 sessions, and some of those sessions are specifically looking at AI. You know, the thing that's interesting about AI is, and like all technology, it is often created to ensure a benefit to all of us, but there are often unintended consequences. And particularly when we're talking about technology that can really get into our hearts and homes, that has the ability to survey our movements, and in fact, to help create our thoughts. That's something that we all should be concerned about. And we know that AI is seen in every aspect, in every crucial system of our country, whether we're talking about our monetary system, whether we're talking about our voting system, whether we're talking about how we do our work each and every day. So it's incumbent upon us as the Congressional Black Caucus Foundation and the members of the CBC that are leaders here in the country to talk about those issues and to talk about what's going to impact and change how people live each and every day, and how can they ensure that their rights are protected, how can they ensure that their voices are heard, and AI is certainly at the heart of that.
Well, Nicole, this is a big deal to our viewers and listeners, many of whom are investing a good deal of capital in this technology right now and trying to figure out if there will be a regulatory answer to what has been incredibly fast growth here. Will the CBC make this a priority in this Congress?
You know, you'd have to talk to the individual members themselves. The individual members, of course, have their own legislative agendas, and as a body, they have their legislative agenda. Our work with the CBC is to provide policy and research information and to make recommendations about what we are learning, what our fellows and researchers are developing, and it's then for them to assess it and be thoughtful then about the legislative decisions and recommendations they are making. So I would urge you and encourage you, and I'm sure they would want to talk to you about how they are centering AI and how they are dealing with it in terms of how they're responding to and being available to their constituents around that issue.
Well, and I'm glad to say that we're in conversation with many of your members on a regular basis here on Bloomberg, Nicole. Getting a sense of what else is important as we move forward here with the idea that the housing market is driving a lot of the economic challenges for Americans right now. You said something important. You're right. The black voter is not a monolith. But this, again, is an issue that impacts everybody, whether you're a black, white, Latino voter. Cracking the housing market is something that many young voters think is impossible, that they will never realize this. Are any of the proposals on the table that you're hearing about at the conference or on the campaign trail possibly able to unlock that?
Well, I will tell you, I am hearing lots of conversations about, one, centering that as a priority issue, because you're absolutely right. Young people and everyone in between
Shortly expecting the results of the Fed reverse repo operation.
Over the heads of their families. How can they buy into the American dream? And we know that home ownership is a way that we pass on generational wealth. And that is something that is particularly important to the Black community, especially since we know, based on data, that it's been very difficult for the Black community to pass on similar levels of wealth, generational wealth to their families. So we are having conversations about that. And one of the things that we're doing is we're listening. This conference is not just about hearing from the elected leaders. It's about creating a space and a forum where voters, where everyday average citizens can be heard. That's something that is rare. You know, when we have a town hall discussion like we just did this morning, we had a town hall discussion. It was a two-part discussion. First, where we talked about democracy and the issues that are at stake in our democracy. And then we had a second panel on Black wealth and how we close the Black wealth gap. One of the reasons we have a town hall is because a town hall concept is about not only sharing information, but about listening. One of the biggest things that leaders and elected officials can do is listen to what their constituents and community members are saying is important to them, what they're saying about
58 counterparties take $294.464 billion at the Fed reverse repo operation.
And we see that as our obligation. We see it as our obligation to provide a forum for leaders to stand up and speak to the constituents and community members. But we also see it as a place where those community members can stop legislators right here in our hallway. If you were here with me now, you would see there are people milling about all over the Washington Convention Center. You can see members that are going to pass you in the hallway. You have the opportunity to stop them and say, hey, you know, Miss Legislator or Mr. Legislator, here's what I'm concerned about in my community. Here's what I'd like you to do. Or here's a thought that I have about something that we are already engaged in as advocates and grassroots workers in our community. That's the beauty of this conference. And again, I think that's what's going to help us create real movement and change. It's that dance, that delicate dance that has to be done between leaders, not only doing, but also being listeners and being empathetic and thoughtful.
Nicole, I only have a minute left, and I want to tap your expertise on election security. Something important happened yesterday. The January 6th certification of the election has been declared a national special security event. We will have voted by then. How worried are you about security in the next 2 months?
You know, I will tell you, we do work here at the Congressional Black Caucus Foundation on voting, and I've spent my career as a civil and human rights lawyer specializing in and working on voting. I will tell you that we have one of the most secure voting systems in this country. There are so many experts around the country, and our research shows that, who work every day to ensure that our systems are working, that they are fair and free, and that they're equitable. And I believe in those systems. I think we all should, and I think we should trust in what those experts are doing and know that they have our best interests at stake.
Nicole, keep in touch with us on what you're seeing there.
And
Nicole Austin Hillary from the Congressional Black Caucus Foundation on Bloomberg.
The top names at Jackson Hole are on Bloomberg.
So we know that unemployment rates have gone from about 3.4% to 4.3%. That's a big change. Now, it's from super hot to solid, right? So I don't want to make it seem like labor markets are weak. But it really starts to tell me that things are much more imbalanced than they have been for quite some time.
Nobody covers Jackson Hole like Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
only on Bloomberg. Context changes everything.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Stocks edging higher as another faster than estimated inflation reading did little to alter bets on Federal Reserve rate cuts. S&P right now up 27, up 0.5%. PPI Thursday, we've got the Dow up 117, now up by about 0.3%. And NASDAQ higher by 130 for the NASDAQ Composite Index, a gain of 0.7%. 10-year 3.69%, the 2-year 3.67%. Gold up $39 the ounce to $25.50, up 1.6%. West Texas Intermediate crude up 2.7%, 69.10 now for a barrel of WTI. Micron Technology shares lower by 3% after BNP Paribas Exane downgraded the chipmaker by 2 notches to underperform from outperform. After the close of trading today, we will be hearing from Adobe. Adobe shares up now by about 0.3%. New York Police Commissioner Edward Caban has resigned after a little more than a year running the biggest American police force amid a federal probe that led to agents searching his home last month. Package delivery company DHL is suing MyPillow, alleging the company synonymous with its founder, chief pitchman and election denier Mike Lindell owes nearly $800,000 for unpaid bills. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you, as always, keeping tabs on the markets for us here on the fastest show in politics. Thanks for being with us. Kaylee Lyons is off today as we bring you our panel once again with our eyes on the road, like Thelma and Louise, Rick Davis and Kristen Hahn heading for North Carolina. Well, Kamala Harris is, at least. This will not be a surprise coming off the debate to see where everyone's going. VP Harris, Charlotte and Greensboro today. Tim Walz, Grand Rapids, Michigan. The map's not changing, maybe as much as some would suggest, at least with regard to priorities here. Doug Emhoff, Arizona, Nevada, Florida, the next 2 days. And Donald Trump's hitting the road as well, talking to supporters today. Tucson, Arizona. Yes, another swing state. He'll be in Nevada tomorrow, speaking in Las Vegas. Rick Davis, of course, partner at Stone Court Capital, Republican strategist and Bloomberg Politics contributor, joined by Kristen Hahn, Democratic strategist. From Rock Solutions, great to see you both here. Kristen, do you like the sound of this roadshow? We can start with the Harris campaign because there's been a lot of talk about the Sun Belt, and she is in North Carolina today with NBC News reporting a new batch, 20,000 new volunteers signing up there since the debate. Pretty remarkable numbers as she zeroes in on North Carolina. Tim Walz in Michigan. Is it as simple as this? You keep going to the same 7 states?
I think you have to. And I think she's smart to go to North Carolina. This is a state that wasn't necessarily in play when President Biden was running for re-election. So spending time there is smart. But yes, I think, it's unfortunate, but this race is going to come down to these swing states. And, I think as well as she did during the debate, I think the campaign will tell you that it's still a very, very, very tight race, and really hunkering down in these states, making sure that we have the votes, making sure that the ground game, which has been developed over many, many, many months, is at its peak, will be essential to winning this election. Because I don't think one debate necessarily changes things as far as it's not going to be a landslide, and we need to be in all of these states pretty regularly. And it's great that we have so many people and so many surrogates that can be doing events all at once.
Yeah. Rick, is this the travel discipline that you would be showing, trying to reach the voters in these 7 states?
Oh, for sure. I mean, I think now the priority on fundraising, going to places like New York and California where the donors are, is much, much less important than going where the votes are. And in fact, I'm really surprised Donald Trump's going to spend any time in California. You're not there looking for votes. You're there looking for money. And it may be a sign that they're feeling a little bit less competitive financially than they need to be in these states. And so they're going around to pick up some extra cash along the way. But the other thing I think that's really interesting is, there's quite a contingent of Harris surrogates out there that are, making good waves in the swing states. And I think it's a real handicap for Trump not to have his wife out there campaigning for him. I mean, she's nowhere to be seen in this campaign from start to finish. She's not raising money for him. Why can't she go to California, let him go to North Carolina or someplace like that? And then they have Vance basically shadowing Harris. We call it bracketing. He goes to the states right before her or right after her. And right now he's shadowing her in these states. And that is more about her strategy than it is about their strategy. So in a campaign where it's all about one person, that works great, maybe, winning primaries and that kind of thing. But you want as many, people out there hammering away in these states as you can for the next 55 days. And it just looks like to me the Trump campaign's getting outgunned.
Well, this is interesting. So I think we've established the rationale, the 7 swing states. So Kristen, Channel 4 in New York says Donald Trump will be holding a rally on Long Island on Wednesday. What's he doing there?
I don't know. And I don't know what J.D. Vance is doing there. Like Rick said, he's there for a few fundraisers. So, it seems like they're a little off. I mean, Trump has said, I think California is in play, which is just ridiculous on the face of it. So I'm not sure exactly what their campaign strategy is. I can't really speak to it, but I do know that the Harris-Walz campaign knows exactly what they're doing, going around to all these states. And like Walz said, we can sleep when we're dead because there's so much work to be done. I think Trump doesn't think that he has to do the same things that normal candidates have to do. I mean, he said, I don't even have to campaign to win. And I certainly hope that's not true because it really is the difference, particularly in states like Pennsylvania. It could be the difference of 10,000 votes or less. And the campaign's on the line. So, maybe he's going to places where he feels comfortable.
I want to get into the campaign apparatus with both of you. And Rick, inside the Trump campaign, the reports that are emerging following the debate in which he said a number of things that the campaign surely did not prepare him to say when we consider the influence of Chris LaCivita, Susan Wiles. He held a war room, as it's being referred to in reporting by Axios, with a number of influencers, so-called, who he has surrounded himself by, including the guy behind Pizzagate, the conspiracy theory, an anti-trans activist I've never heard of. Also, Laura Loomer, who, of course, joined him at Ground Zero yesterday and believes that 9/11 was an inside job and spent the last couple of days promoting these ideas that Haitian immigrants in Springfield, Ohio, were eating people's pets. That actually came out of his mouth, of course, during the debate. You have dealt with challenging candidates, Rick, and I wonder what happens inside a campaign when you've lost the direct control over the message from your candidate.
Yeah, and this is all being facilitated by Donald Trump himself. I mean, what's interesting about this is it's Trump versus his campaign. Normally, the campaign has issues inside direction, strategy, what kind of ads we ought to be, posting up, how much money do we want to put in these states, and that's a healthy, lively debate that sometimes gets bogged down, but otherwise is what every presidential campaign goes through. What's happened with the Trump campaign is he's kind of gone rogue on his own campaign. I mean, the idea of having Laura Loomer on the plane talking to him about topics going into the presidential debate had to have driven Chris LaCivita and Susie Wiles crazy. I mean, it's bad enough that Trump won't sit for debate prep, but to have someone chirping in his ear right before he goes on the stage about Haitian immigrants eating dogs and cats, no wonder he talked about it. And by the way, that's his whole MO. It's the last person in his ear, and that's what comes out of his mouth. So, I mean, it's a real struggle. And at a time when performance matters, right? I mean, the debate performance matters. What he says on the stump now matters. and in addition to where he goes and what kind of events he's having. And so I really do think we've got a rogue situation. We've had it since his speech at the convention where he decided to go off script and do his own thing. And honestly, ever since then, it was kind of the height of his campaign, and it's only been kind of dribbling down from there.
Kristen, even Marjorie Taylor Greene is calling out Laura Loomer on Twitter. It's a pretty ugly tweet that I will not read on the air, that Marjorie Taylor Greene retweeted, called appalling and extremely racist, which might give you a sense of where we are on this particular note. Is it the campaign's job? Is it not the campaign's job to protect the candidate from people like this?
I mean, I don't think that they can. I mean, you're looking at Lauren Boebert. I saw that, and it was kind of shocking that somebody like her would go against him. But I think the campaign can only do so much with personalities like that. And I think going back to what we were talking about earlier with the productive surrogates, and that's where the Harris-Walz campaign is really able to cover a lot of these states. The campaign, you've got Trump who's on the stump saying, should I go personal? And everybody says yes. And he goes, great, I'm going to fire all of my campaign consultants. I mean, he clearly doesn't listen to any of them. He doesn't care what they have to say. That's the way it was the first time around. But, if the Democrats can really hit the ground and really put in the work and appeal to these voters in the middle who Trump clearly doesn't think he needs to win the election, then I think that we'll ultimately be successful.
Yeah. Rick, question from a terminal user. What's the Republican counter, if there is one, I will insert here, to Democrats having Taylor Swift pushing 18 to 25-year-olds to vote with an actual link to register in her Instagram story?
Yeah, it's tough stuff. We had a lot of celebrities endorsing Barack Obama when we ran John McCain against him in 2008. And look, I mean, part of what you got to talk about is she's taking upon herself all these, crazy liberal ethics that exist in Hollywood. And she's become the Hollywood candidate. We called Barack Obama a celebrity. We didn't think that was a good thing for him. And so there is a way to push back, and you are defined by the people who endorse you. So everyone thinks, wow, this is a great endorsement, but there are going to be people who don't like, well, maybe not in the Taylor Swift's case, but other endorsements. And so, but like it's a bombshell, hard to deal with, and it's almost like you're wasting your breath even getting into the discussion.
So it's Taylor Swift versus Kid Rock, I guess. Kristen, do we have a battle of the bands?
I don't think there's much of a battle there. I would totally agree with Rick. On the celebrity endorsements, I kind of cringe a little bit every once in a while because Democrats, we've always been painted as like the Hollywood out of touch, candidate. But I think I put the Swifties all in their own space, because also, one of the big things Democrats are trying to do is outreach to younger people. And that's something I think she can really help with.
The link is in the post, for crying out loud. Hey, Kristen, it's great to see you. Kristen Hahn, Rock Solutions, Democratic strategist, and of course, Rick Davis, Bloomberg Politics contributor, partner at Stone Court Capital. A great conversation, as always. Leon Panetta is coming in next on the fastest show in politics. I'm Joe Matthew. This is Bloomberg.
If you look at private equity just as one piece of the institutional equity market, there are 3 times as many dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different approach. It's a function of where you are in your life cycle. Everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising. And in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors.
Saturday mornings, I understand you have off.
Yeah, Saturday is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work. And I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm on to a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow. And I generally believe that Monday mornings I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy. And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks pushing higher. The Dow, the S&P, NASDAQ solidly in the green right now. PPI Thursday, and the S&P up 37. Gain right now of 0.7%. Dow Jones Industrial Average up 180. That is a gain of 0.4%. While the NASDAQ Composite Index up 164, up by 1%. 10-year at 3.69%. The 2-year 3.66%. Gold up $41 the ounce to $25.53, up 1.7%. And West Texas Intermediate crude oil now up 2.7%, $69.14 for a barrel of WTI. Stocks are edging higher as another faster than estimated inflation reading did little to alter bets on Federal Reserve rate cuts. Kroger has lifted its full-year guidance as the grocery store operator benefits from consumers prioritizing spending on groceries and other essentials. Shares of Kroger, they're climbing now by 6.2%. And General Mills has agreed to sell its North American yogurt business, which includes the popular Yoplait brand, for $2.1 billion in cash. General Mills shares, they are down now by roughly 0.5%. New York City Police Commissioner Edward Caban has resigned after a little more than a year running the biggest American police force amid a federal investigation that led to agents searching his home this month. And OpenAI and NVIDIA have been discussing AI infrastructure needs with the Biden team. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues now. Once again, here he is, your host, Joe Matthew.
All right, Charlie Pellet, thank you. Watching Wall Street for us every day here on the fastest show in politics. I'm Joe Matthew. Indeed, in Washington, Kaylee is off today. It's good to see you. Thanks for being with us on the Thursday edition as we stand by for news on Ukraine. This is important and will likely happen before we ever get down to a matter of funding the government, as Bloomberg reports a decision on Ukraine's request to use Western-provided, U.S.-provided weapons offensively against Russia is unlikely to come before the UN meeting that we're standing by for in New York, scheduled for September 22 and 23. But President Biden may weigh in on a potential policy shift sooner than that. We've heard from Antony Blinken. We've heard from Ben Cardin. We've heard from Michael McCaul. And it's always an honor to hear from Leon Panetta, who's with us right now on Bloomberg TV and radio. Of course, the former U.S. Secretary of Defense, former CIA director, former White House Chief of Staff, the longest business card in Washington. Mr. Secretary, it's great to see you here. Do you anticipate that we will let our hands off the reins here to allow Ukraine to take the fight to Russia?
Well, I certainly hope we give them a little more room to be able to strike at Russian targets and be able to defend themselves. So I'm hopeful that they can find a way to give Ukraine a little more flexibility to be able to go after those vital targets that are frankly attacking Ukraine without any kind of retaliation. That's got to stop.
Should they be allowed to shoot down MiGs that are taking off in Russia, armed to attack Ukraine?
Well, again, I think it's important to give them the ability to fully defend themselves. If those MiGs are going after targets in Ukraine, then I think they should take steps to be able to defend themselves against that kind of attack. Look, this is a war, and Russia is using everything they have to be able to go after Ukraine. And I think it's our responsibility and the responsibility of our allies to be able to make sure that Ukraine is fully armed, has all of the weapons that are necessary in order to fully defend themselves in this war.
Well, it's something. The air raid sirens we know go off in Kyiv the minute those MiG-31s take off, loaded for bear. Mr. Secretary, I'm sure you watched the debate the other night. There were a lot of questions about what would happen to Ukraine policy if Donald Trump were reelected. He was asked repeatedly, and we can share this moment of the debate with our audience, whether he even wants Ukraine to win. Here's how it went.
Do you want Ukraine to win this war?
I want the war to stop. I want to save lives that are being uselessly, people being killed by the millions. It's the millions. It's so much worse than the numbers that you're getting, which are fake numbers. Look, we're in for $250 billion or more because they don't ask Europe, which is a much bigger beneficiary to getting this thing done than we are.
Mr. Secretary, you can weigh in on what you think a Trump 2.0 might mean for Ukraine, but we hear from a lot of Trump supporters who say, you know what, no new war has started when he was in office and the world was a safer place. How do you respond?
Well, I think that if you're going to be a world leader, you have to stand up to our enemies. You have to stand up to tyrants and to terrorists. And you have to build strong alliances. And that's not what Trump is about. Trump thinks that somehow he can operate alone and cut deals. I mean, the fact that he would not say that Ukraine should be successful at defending their democracy tells you an awful lot about the way he approaches these issues. And it's basically appeasement. It's capitulating to our adversaries. And that's not a way to promote peace in the future. Yeah, it could get you peace in the short term. I mean, he said he can basically cut deals on all of the crises that we are facing right now. Yeah, he could by simply caving in and letting our adversaries get everything they want. That's an approach, frankly, that Neville Chamberlain tried with Hitler in Czechoslovakia. Wow. And in the end, it didn't pay off then, and it won't pay off now. So I would prefer a president that is willing to stand up to our adversaries, build strong alliances, and exercise responsible world leadership. And that's not what Trump does. He didn't do it in his first term, and he wouldn't do it as another president.
Well, you know, he likes to take credit for encouraging, incentivizing European nations to contribute more to NATO, for instance. What would happen to that alliance under a Trump 2.0?
I'm just afraid that deep down, Trump, and he's pretty much said it, is an isolationist. He wants to withdraw from the rest of the world and basically handle things on his own. And my view is that we live in a dangerous world that requires United States world leadership, and it requires our ability to work closely with our allies. That's the key to being able to confront tyrants and terrorists in the world. And so I just worry that what he would try to do is basically weaken our relationship with our allies, try to operate alone. And look, the record is not that good. I mean, he spent 3 meetings sitting down with Kim Jong-un and didn't get a damn thing. So I'm not that encouraged that he knows how to cut a good deal.
How well do you know Vice President Harris, Mr. Secretary? Her experience has been called into question by her rival in this case. Does she have the confidence to run the United States military?
I think she does. I've known her since she was a prosecuting attorney. I knew her as district attorney and as attorney general. And I find her to be a pragmatic prosecutor, which is not a bad thing to be when you're going to be president of the United States and have to deal with challenges and look at the evidence involved with each of those challenges and crises. So I have a feeling, based on what I saw her do as vice president, meeting with foreign leaders, understanding the crises that are out there, understanding the role that the United States has to play, and most importantly, respecting not just the role of our veterans, which Trump continues to criticize, but understanding the role of our military. The role of our military is to defend us from foreign enemies. It's not to threaten Americans. It's not to round up immigrants into camps. Our military has its first loyalty to the Constitution of the United States, not to the president.
I have to ask you about what's happening
U.S.
in the Middle
stocks
East before we
extend
let you
gains,
go, Mr.
NASDAQ
Secretary.
up
There's news
1%.
that the U.S. is bringing the USS Teddy Roosevelt home. We had a rare moment where 2 carrier strike groups were in the region for fear that Iran would retaliate. Does this tell us that that threat level has diminished so much that we don't need the deterrence any longer?
No, not at all. And my understanding is that the Harry Truman carrier is going to be deployed to that area soon. And I think we will continue to have to provide the military protection in that region, particularly if there's no ceasefire. We're going to continue to see missiles thrown at one another. And the United States has got to be prepared to defend against those missiles, particularly in the Red Sea, where the Houthis have continued to go after ships in the Red Sea. So I believe we'll continue to have a strong presence in the Middle East.
Fascinating. I think that's news there, the Harry Truman apparently on its way. Leon Panetta, it's great to see you, Mr. Secretary. Thank you so much for being with us. As always, the insights on Bloomberg TV and radio from the former Secretary of Defense, former Director of the CIA, and former White House Chief of Staff, never mind member of Congress. He's now founder of the Panetta Institute. I'm Joe Matthew in Washington, where we turn our attention back to the campaign trail with the help of Saleha Mohsen, of course, the hosts of the Big Take DC podcast. Nice to see you back at the table here today. We've been talking, Saleha, a lot about the road trips that are coming off the debate. Not a mystery to see the states that both campaigns are going to. It's on to North Carolina today for Kamala Harris. And Donald Trump's headed out west to Arizona. These are the states that will decide the election.
Yeah, absolutely. Regardless of what the result of the debate was, how it made Trump look, how it made Harris look, this is a dead heat election. And you can see that neither candidate is willing to give up the underdog mantle. They're really kind of showing that we're going to put in the grit and the time needed in these key states to win, regardless of when we have a good month with donors and a good month with debates or a bad month.
It's really funny. They do both want to carry that mantle, but in a race so close, they kind of both are underdogs in this case, aren't they? One had the job, the other's in the White House right now, and this is so close that we can't call it.
Yeah, and the money game is also kind of split. Harris has had some really good months. Trump has had some really good months. Yeah. Right now, the momentum belongs to Harris, but you never know how quickly that could flip.
You're going to be talking, we should note, with Pete Buttigieg a little bit later on today for the podcast that drops today, by the way. This is your pro tip to make sure to download it a little bit later on. Go to Apple, Spotify, wherever, if you're not already subscribed to the Big Take DC podcast. He's a powerful surrogate for the Harris campaign. Is he talking to you as the transportation secretary or as a spokesman for the camp?
Definitely as transportation secretary. I will have questions for him on what consumers are facing with the holiday travel ahead, Boeing, things like that. But hey, you can't expect that a reporter isn't going to ask about what could happen in the next 4 years.
And he'll cite the Hatch Act or something. But no, he actually is going to be helping and has been helping Kamala Harris. Having been on the short list, he's known to many as one of the most effective communicators the Democratic Party has. Is that fair?
Absolutely, and he's very proud of going on Fox News frequently and sparring over there. He's out there quite a bit. He's an effective communicator. He's delivered some great speeches as well. He's also known as he's flying about the country. He travels economy when he's traveling as Secretary Buttigieg, and people, his staff were telling me that he'll sit down and then the person next to them will recognize him or kind of feel like they might know him. He'll introduce himself, and then they'll give him direct complaints about airlines right there.
Oh, God. On the flight. That's great. See, I want to listen to this. It's really funny. You hear from a lot of members, as you know, of Congress like that. They got the pin. And the airline always would say, well, I'll give you an upgrade here, but they have to sit in 33E or they're going to hear about it and see themselves in the local paper riding in first class, right? Coming off the debate, big questions about whether there's going to be another, and we don't know right now, but what's your gut say?
I'd be surprised if there was.
What's the motivation for Donald Trump to experience that again?
Well, exactly. There's no motivation. And also for Harris, if you came out so high off the next one, go out on a high.
Right. So that sounds like a no, but we do have a vice presidential debate. It's the 1st of October. Will that have an impact on the race? I mean, typically that's kind of a non-event, but this race is a little different.
This race has felt different. This year has felt different all along. People don't choose based on a vice president.
Even Trump will tell you that.
Yeah, even Trump will tell you that, as he did during the debate. He did not want to talk about J.D. Vance. I don't know. I think it'll be interesting in case anything policy-wise comes out, but it's more of a personality contest, especially at that level.
Podcast drops a couple hours from now.
Yes.
Have a great interview. I'm looking forward to hearing it. Pete Buttigieg on with Saleha Mohsen coming up later on today. Here in Washington, the Big Take DC podcast, that does it for us on Balance of Power. You do want to stay right here, though. Do you hear Jeter's coming up? Bloomberg Business Week. Untuckit founder Chris Riccobono, and yes, New York Yankees Hall of Famer Derek Jeter coming up next right here on Bloomberg. I'll meet you on the late edition of Balance of Power. That's 5 p.m. Eastern Time right here on Bloomberg TV and radio.
covers earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that you know most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
The top names in business are on Bloomberg.
It's about category creation. You know, today we are a tea drinking nation. Tea penetration is 91%, 93%. We are at 25% of the affluent class. We are at 14-15% of the overall market. I'm confident that if we continue to do what we are good at, in terms of the Starbucks experience, in terms of the coffee expertise, in terms of localizing and innovating, we will get our consumers.
Nobody covers business like Bloomberg.
Good morning from our world headquarters in New York. I'm Menace Crenny.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week. It is Thursday, September 12th. I'm Carol Masser, along with Tim Stenevec. And folks, we got a rally underway. We are just hovering at our best levels of the session. And Tim, you've got the big caps, the small caps, everything. We're talking about $1.3 trillion added to the S&P 500 this week. So, yeah, we've got kind of some bullish sentiments, definitely, on Wall Street.
Despite another pickup in U.S. inflation. We're going to be talking about that in just a minute, the latest economic drop and what it means for the Fed decision next week. Who do we have? Bloomberg News International Economics and Policy correspondent Michael McKee joining us in just a few minutes.
Yep, following all of those data points. Hey, we're also going to get into our big take, our Bloomberg Big Take, which is on Intel's stinging fall from grace. We've talked about the woes over at Intel for a long time, but we're going to get into the particulars and what it does to maybe get on the other side of this.
All right. We also got an all-star chat with Untuckit founder Chris Riccobono. He's back with us, and he brought New York Yankees Hall of Famer Derek Jeter with him. They're joining us in studio in just a few minutes.
He talked about their partnership last time, and
yeah,
he said, I'm going to come back, the two of us, and talk about it. So he's going to be in studio in just a moment. We've got J&J CFO on the future, and then one more thing. Yep, sorry guys, summer is over, and so it's time to talk, holiday travel. We're going to get to that.
Too early to start booking those tickets,
No,
right?
Start now.
All right, I'll add more over the next hour on Bloomberg Business Week. First up, a check on the day's trade and top business stories. Here's Charlie.
All right, thank you very much. Happy Thursday, PPI Thursday to you both. Lots going on, lots of moving parts. Right to the numbers. We got a rally underway now with the S&P 500 index up 45, 55, 98 where we stand on the S&P, up by about 0.8%. The Dow up 195, up now by about 0.5%. And NASDAQ is advancing 198 points, up 1.1%. We're Russell 2000 index of small cap shares, cannot ignore that today. That index up now by 1.6%. 10-year yield 3.69% with a 2-year 3.66%. Spot gold up $41 the ounce to $25.52, up 1.6%. And West Texas Intermediate crude oil up 2.7%, $69.11 for a barrel of WTI. Boeing shares up 1%. Members of Boeing's largest union vote today on the first comprehensive labor contract in 16 years, setting the stage for a
BSW notes that 42% of all production at the U.S. Gulf of Mexico is shut due to Storm Francine.
Manufacturing missteps. Delta Airlines expects its full-year profit to be at or above the midpoint of its prior guidance. We've got Delta up now by 1.1%. Alaska Air Group boosting its outlook for third quarter profit on strong summer demand. Alaska up 2.4%. Of course, a whole lot more on the airlines coming up this afternoon on Bloomberg Business Week. New York City Police Commissioner Edward Caban has resigned after a little more
And
than a year
53% of the natural gas production at the U.S. Gulf of Mexico is shut due to Storm Francine.
Led to agents searching his home this month. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks, you know this. Another slightly hotter inflation print, which, of course, the Fed watches, and a read on the U.S. labor market that showed some weakness, which we know the U.S. Central Bank is increasingly focused on. So let's get to our economic roundup.
Now that we're just less than a week out from the next Fed decision, back with us, we got Bloomberg News International economic and policy correspondent Michael McKee. He's here in our Bloomberg Business Week studio. So, Mike, a slightly hotter inflation print, a slightly higher jobless claim. Does that slightly mean some trouble?
We just had to make life more interesting for you guys.
That's what we want,
and said no. No, it doesn't mean that there's any trouble here. Basically, what we're seeing with the PPI and CPI are slightly higher numbers. With the PPI today, it was services inflation, and within services inflation, it was what they call trade services, which is the margins for retailers and wholesalers. And they were up 0.6% after a drop last month, so it suggests that profits are doing okay so far this quarter.
Because they can hold on to the margins, right?
Yeah.
And profitability.
And so that is what pushed up the overall PPI. So it's really not a terrible situation. Some of the things in the CPI that went up, like airfares, were down in PPI. So it doesn't suggest that we have an inflation problem, but it does give the Fed reason to do 25 and say our issues are not over yet.
CPI, PPI, obviously consumer price index versus producer price index. What's the difference between these two and what they reveal about overall inflation? Like, how do you put the pie together, the inflation pie?
Well, the easiest way to describe the difference between them is the CPI is what you pay and the PPI is what the companies charge. And that's the difference between the two of them for the most part. And the issue with CPI versus PPI, people look at the PPI and say, oh, well, it went up or down, and that's going to affect the CPI. But there's a lot of middlemen between the producers and the consumers, and everybody has a markup. So it's hard to draw a direct parallel between the two.
And sometimes people make choices, right, in terms of the middlemen, not to pass along to consumers.
Yeah, it depends on what their situation is.
Or increasingly direct to consumer, bypassing middle people?
Well, there's always going to be sort of middle people, because when you're looking at PPI, you're looking at, in many cases, raw materials. Well, somebody's got to turn the metal into steel and the cows into hamburgers and stuff like that.
Why'd you have to go there?
Ouch.
All right, let's just...
Sorry for all you vegetarians out there.
Hamburgers grow on
Look
trees.
away, look away.
Hamburgers are grow on trees, Mike.
Hey, listen, is this it? Because I feel like since before Jackson Hole, before the last Fed meeting, we have just been counting down to next week's Fed meeting. And we had a bunch of economic reports between Jackson Hole, right, and next week's Fed meeting. So is this it in terms of data points that the Fed really cares about?
Yeah, we get the Michigan confidence numbers tomorrow. There's no reason to think that confidence has fallen off a cliff. It'd be interesting to see if there's any reflection of the debate in there, but probably not, because it was shortly before they closed the survey. But then we look at the inflation expectations numbers, and while they can move, they don't move very much at a time. And the New York Fed does its own survey, and they didn't move very much in that earlier this week. So there's probably nothing else that's going to influence the Fed.
Mike, we don't know what's going to happen next week. A lot of people think they know what's going to happen next week with the Fed. But I want to talk about something after next week and what the rate cut path looks like for the remainder of the year. What's the smart question to be asking about the Fed's rate cut path between now and the end of 2024?
Well, it's important for markets, obviously, to know what the path is, and because you're trying to discount future earnings, so you're trying to figure out what it is. And then for planning purposes, if you're a business and you're considering investments or expansion or something like that, or if you're just an ordinary citizen who's thinking about buying a house or a car, where do you think interest rates are going? Is going to be a question that will define when you do whatever you're going to do. And we've seen mortgage rates come down, but mortgage applications have not gone up because people are looking at this and going, well, they're going to go down further. So why do I want to, settle for a high rate? So that's the question that people are going to want to know is where do we go from here and how fast do we get there?
Hey, I'm glad you went to housing. Forgive me, I'm just going to read this because this was part of a Bloomberg story. Bloomberg News Morning Consult tracking poll of the 7 states finds that voters consistently say the economy is their top priority in the upcoming election. We know that. When asked in August which economic factors carry the most weight at the ballot box, swing state voters selected housing costs more often than unemployment, pay raises, or interest rates. As an economist, because this is something that comes up with the candidates, how do you explain the lack of housing, in particular affordable housing, which I feel like we have been talking about as a problem for years? Is it something a candidate or a president can cure, or is it a case of builders wanting to build more homes and get the permits that are needed to do it?
Well, there, you just put your finger on it. The problem is at the local level, zoning at the local level. It's something, zoning's gotten much tighter over the decades. It's much harder for builders to acquire land. Land is much more expensive, and it just keeps pushing people farther out, and then you build up a suburb, and then people don't want anybody else to come in. So that's an ongoing problem, and it's really not an issue that a president or to a certain extent a Congress can solve. The one thing that has been suggested is you create incentives for cities to loosen their zoning rules. You get some federal aid kind of programs going. I want to say, bless her heart, Kamala Harris, with the $25,000, that's not going to help.
Yeah, we spoke to Stefan Seelig about this yesterday.
That's not going to help because that would stimulate demand, and it's supply that is the problem.
Right, and demand would just, even more demand than we've got already, would just shoot up prices.
Just a reminder, when this is put to voters oftentimes at the local level, at the ballot box, oftentimes those homeowners push back on the idea of creating zoning with more density, Mike, and that's a real challenge for bringing the price of housing down.
It's always the NIMBY question, and it's hard to get people to go YIMBY on it.
Yes, indeed, in my backyard. I love that. Good stuff. What?
I love it when Mike's in our backyard.
I know. In our studio?
Yeah.
Michael McKee, thank you as always. Bloomberg News International Economics and Policy Correspondent. All right, that's today's economic data that you got to know about. Let's get to one of the most read stories on the Bloomberg about a really important company in our world.
It's about the slow motion disaster at one of those most important companies in the modern tech industry. It's reaching a pivotal moment this week. So writes Ian King, a Bloomberg News U.S. semiconductor and networking reporter, in today's Bloomberg Big Take, which you can read on the Bloomberg and at Bloomberg.com/Big Take.
Yeah, Ian, they're out. Speaking of property issues, San Francisco. He's there in our San Francisco bureau. Ian, I got to say, first of all, great story. We've been talking with you about the decline for Intel. I feel like more than a year, more than 2 years. It's been a while. We talk about this a lot. It feels like though it's coming to a head as you report. Tell us about the meetings that have been going on with Intel's board this week.
Yeah, I mean, I think it's important to be precise about our understanding of these meetings. These meetings that are going on, our board meetings, they're not the kind of barbarians at the gate, we're going to throw the management out type meetings yet, but they are considering basically what Intel should be doing, what perhaps it shouldn't be doing in order to kind of marshal resources to continue to try to fund this expansive plan that they have going forward. Clearly, its business operations are not able to do that right now. As we saw with its recent earnings release, things were considerably worse than I think a lot of people had expected, including the management. And so really what this meeting is doing is trying to sort of get that track back on plan rather than potentially throw it out the window.
So Ian, give us some context here about just how precarious Intel's finances are right now. Help us understand that.
Yeah, I mean, it's very simple. They are trying to spend an enormous amount of money at a time when they do not have that money coming in from their operations, right? That what they were good at and what they are still quite good at isn't paying like it used to. They have $50 billion in debt. They're losing money, they have negative cash flow, and they need to spend and continue to spend over a number of years on projects that probably won't pay off for a number of years. It's a very difficult situation to be in.
Yeah, kind of amazing that this is what we're talking about in conjunction with Intel. Hey, another stark metric is the share price. It was once nearly a $75 a share stock. It's now below 20 a share. It's down more than 60% year to date. 90% gain, though, last year. It got above $50 a share. So that's a big swing in about a year or so. What are the ongoing disappointments? What are the hopes and possible pivots of this company that keeps it going for, I don't know, years to come?
Yeah, I mean, the share price, I think, has contributed to a lot of the speculation that we're seeing about, you know, where the company goes and who might be interested and is it affordable as a purchase, blah, blah. There's a lot of that going on outside of Intel. But to answer your question more directly, they need a win. They need a big customer for their foundry or their outsourced chip-making effort that they're trying to get off the ground. They need some of these products that have been absolute dominant to return towards that, to stop losing market share. They need this massive AI spend that we're seeing to look in their direction. Right now, that's just not the case.
In the U.S. government, part of the story in recent years as well, with the Biden administration, you know, the idea is that they're going to give billions of dollars to Intel. Help us understand the position of the U.S. government and where they stand in this.
Yeah, two aspects to that, and I think that's a very germane question. All of the scenarios that are being floated outside of Intel about where it might be going or who might buy it, how it might be split up, the U.S. government regards Intel as a strategic asset, that its technology is fundamentally important to this country. So all of those scenarios, and they are just scenarios at this point, would have to go through Washington, and Washington is going to take a very, very critical look at those. So that adds a layer of complication, takes away from the standard Wall Street playbook in a lot of respects. And the other side of that is, you mentioned the money that we are paying as taxpayers for Intel. It's not enough, right? It's helpful. It cuts out some of the differential in terms of what it costs Intel's overseas competitors to put plants in the ground. And hopefully makes it, you know, a level playing field, but it doesn't. It's not a bailout. It's not the kind of money that Intel needs. We're talking about tens of billions of dollars a year over multiple years just to play in this game.
Hey, Ian, one thing I wonder in your story, you take, you know, a look back at what happened to Intel and why we got to this point, why we're having this conversation with you today, why you wrote this story today. Having said that, you also note in your story that it didn't have to come to this. Is there anything Intel can learn by looking backward in terms of where it needs to go forward?
Yeah, I mean, well, that's why Pat Gelsinger was brought in. That was a step backwards. He left Intel to become the VMware CEO at the height of its powers. His plan was to do what Intel's good at: lead in manufacturing, have products that just are so good that people have to pay through the nose for them. That's his plan. That requires a lot of money. So that's what he's tried to go back to. But things have moved on since then. Competitors like TSMC, like NVIDIA, are now very strong, have the kind of dominance, have the kind of clout that Intel used to have. So he's trying to, you know, he's trying to play the greatest hits at a time when music tastes have moved on.
One thing I do wonder, if AI, if a year and a half ago, you know, Microsoft didn't do, you know, their investment in OpenAI and ChatGPT, if that hadn't happened, and I know it's not a good way to do this, but if it hadn't happened, would you have written this story about Intel being at kind of a critical juncture? Would we not be having this conversation? Is it just AI, or it's something much more systemic and in the Intel culture that has just kind of brought about its problems?
I would say that's a very good question, and it's a mixture of the two. Right? The AI opportunity has, in shareholders' minds, in technologists' minds, concentrated just how important and useful technology other than Intel's is, right? And this was an opportunity that Intel should have taken and would have given it more time, would have given it more resources to be able to devote to putting some of these other things right. So it's a mixture of the two. It's definitely an accelerant, but it's not the root cause. The root cause are decisions that were made by Pat Gelsinger's predecessors, decisions that have turned out to have been terrible decisions, and indeed that's how he's characterized them.
It's hard to ask you a question, Ian, about what things look like in the future, but help us imagine a scenario. Is there one where a storied company like Intel just doesn't exist in a few years?
I mean, the conversations that I've been having with people who look at the company, who have invested in the company, some of them who don't invest in the company, that is what it's come to. It's the oh dear moment, shall we say. And even for that to be even a vague consideration around a company that just ruled the world like Intel did is frankly shocking. You got to remember, I think the perfect illustration of that is 2021 wasn't that long ago. They had 3 times as much total revenue as NVIDIA, and look where we are now.
That's an incredible decline, right, when you think about their business. Ian, as always, great stuff, and I know we continue to talk about this company, and we'll continue to see what the next chapter brings when it comes to Intel. All right, so appreciate it. Ian King, thank you, U.S. Semiconductor and Networking reporter at Bloomberg News, out there in our San Francisco bureau. By the way, this is among the most read stories on the Bloomberg, and it is the Bloomberg Big Take, which you can check out on the Bloomberg terminal and at bloomberg.com/Big Take.
The shares of Intel down about 0.8% as we speak, 0.7%. The NASDAQ Composite, though, up 1%. The S&P 500 up 0.7%. The Dow Jones Industrial Average up 0.4%. All
right, we're just going to say we're kind of excited about our next duo. Coming up next, the founder of Untuckit, Chris Riccobono, and New York Yankees Hall of Famer, shortstop, of course, we're talking about Derek Jeter. He's going to join us. The two of them together teaming up a partnership when it comes to athletic wear. We're going to get the details on that partnership. That's coming up next.
What did you say to your mother and father when you said, I'm dropping out, despite the fact I said I wasn't going to drop out?
Well, I said I'm just taking some leave.
Oh, leave?
Yeah. I think I'm still technically on leave. Harvard has kind of a funny relationship with
How long can you be on leave? For 10 years or so?
Well, I guess we're going to find out, yeah.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup.
This is a 3 as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
The top names at Jackson Hole are on Bloomberg.
So we know that unemployment rates have gone from about 3.4% to 4.3%. That's a big change. Now, it's from super hot to solid, right? So I don't want to make it seem like labor markets are weak. But it really starts to tell me that things are much more imbalanced than they have been for quite some time.
Nobody covers Jackson Hole like Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ all advancing, looking at a 0.7% gain right now on the S&P, up 40 points. The S&P at 55.95. The Dow pushing higher, very close to session highs, up 161 now, up 0.4%. NASDAQ up 1.1%, with the Russell 2000 index of small cap shares, the outperformer, up now by 1.4%. 10-year 3.68%, the 2-year 3.65%. Spot gold ripping higher by 41 points, 25.53 the ounce, up 1.7%. Big day for crude. West Texas Intermediate up 2.5%, 69 even a barrel. Brent crude, the global benchmark, back above 72, 72.01 for a barrel of Brent, up now by 2%. Again, recapping, S&P up by 0.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, let me throw out one metric. I guess I kind of got to do this. The global sportswear market size, valued at nearly $413 billion in 2022, estimated to reach nearly $749 billion by 2031. And listen, there's a lot of players in it, and looking to take a share of it is a partnership by our next two guests, both with brands that are very well known, now with a combined brand known as Greatness Wins.
So let's get to the interview with more joining us here in the studio, the founder of Untucked, who came up with the idea for his casual shirts while working at GE Healthcare. Chris Riccobono back with us. Also with us, Hall of Fame shortstop and 5-time World Series champion with the New York Yankees. Also an e-commerce investor too, Derek Jeter, both here in the Bloomberg Business Week studio. Okay, guys, first up, we want to know how you guys got together. How did this come together? Who called who? Who had the idea for who to get involved? How did it come about?
That's a good question. You start. We'll see what version comes out. Go ahead.
I was going to say Derek reached out to me, but that's not how it worked. So over the pandemic, I was looking to solve another problem in the fashion industry, and I thought about athletic apparel. And it didn't exist for me, something that had a great fit, but also had performance first in mind. So I came up with this concept and this idea, but now I wanted a few athletes behind me. And at the time, I think Derek might have still had a contract with Nike or it was winding down, and I didn't think that I could get to him or that he'd be interested. But after a year of bothering him and his agents, he actually called me and said, "Chris, I'm just not that interested and excited in this." But I said, he can't get off the phone, Derek. How can I get you excited? So we talked for a while after that, and we kind of came together with both of our visions. You know, I'm the apparel guy. That's the way I think about it. Derek's was a successful entrepreneur, but also very successful as, you know, a Nike guy.
Yeah.
So I knew that he had a lot of insight that I didn't have, and he shared it with me, and we launched the brand about a year and a half ago, and we're having great success.
Okay, you weren't excited, and then you became excited. How'd that happen? How'd you make that turn?
Well, I think, you know, first and foremost, getting to know Chris, we talked about the idea. I've had relationships with athletic brands throughout my career, and great relationships, and I still do today.
Right.
And, you know, when I was first speaking to Chris, I was like, well, first of all, you know, this is a crowded space. It's not as easy to attack this space, and it's going to take some time, and it's going to take a lot of energy. And I wouldn't say I wasn't excited, but when I do something, I'm all in. And if I'm not all in, I'm just not going to do it. And at that point, when we were having the discussion, I said, you know, I don't think now is the time. And then we actually got together. We had a chance to look and feel and touch the product, and that started getting me very, very excited about it. So I guess that's the best way to put it in our short period of time.
You do, though, Derek, probably get a lot of investment pitches, not just in the apparel world, but no question, from lots of different entrepreneurs who want your involvement. What was it specifically about this one with Chris, with Untucked, that really caught your eye?
I think you got to get to know the people, any business that you're in. It's the same thing when you're on a team, on the field. You have to have the right people
or
on your side.
Or
yeah,
a co-anchor.
Exactly. I was going to say that, but you didn't give me enough time to say it. And, I just found Chris to be very, very passionate about it. You can't fake passion. You either are or you aren't. And, even when I told him that I wasn't interested, he kept calling, and we kept having the conversation. And I knew if you're going to be successful, you need those types of people on your side.
I always think about that. I remember talking to a top M&A banker, and he's like, the only way you get deals done is the CEOs have to like each other, and that's how you get things come to the table. Would you say no to a great deal because you didn't like somebody?
Oh, without a doubt. I mean, you end up working a lot. It's funny. When Derek said that he wanted to be more involved, and when he goes all in, I was thinking he was just doing that as an equity play to get some more equity.
Yeah.
Not that he actually wanted to be. And Derek's like that. I mean, he wants to talk about everything, every decision.
And you want somebody who's really
I want
involved.
something that, yes, because I don't know everything, and I definitely don't know everything in the athletic apparel space. So it's been a really...
This is recorded, right? I'm going to play that back to him when we do. We're going to play that back.
You can do that. You can loop it. You can loop it.
Yeah, exactly.
Well, the same thing for you. I mean, Derek, when you get involved in something, how, we asked about what made this interesting, but in general, how involved do you want to be? I mean, how much do you have to love the brand that you hook up with?
You have to be involved. I mean, otherwise you're just giving your money and you're hoping someone else runs with it and makes you more. But when you're passionate about something, when you put in the time, you put in the effort. I think the best thing to say about us is we disagree probably more than we agree. And I think that's a good thing.
Yeah.
I mean, you don't want people that always think the same as you. Otherwise, you're never going to make improvements. You're never going to make progress.
Is it hard to say no to Derek, though? We just talked with a leadership, we're author of a leadership book, and they talked about CEOs who, once they get to the top, they surround themselves with people who don't say no.
Listen, I rolled the dice right from the beginning, and we went after each other a little bit. But like you said, it's the best way to go about it. Like, you want to leave at the end of the day and have people go against your views, because if they're agreeing with you, you're not going to always do the right thing. So I thought that was a great. I wondered if he was if he was going to want to continue the relationship a few times, but it really came together, and now we're on the same page, and things are going really well for us.
Well, I do wonder, when does it get a little tricky? Like any partnership, whether it's a marriage, whether it's working relationships, whether it's business relationships, there's always tough times. What are some of those tough times?
I don't know why you're looking at me.
Yeah, I was about to say, you guys just keep going. You answer that question. I don't know how.
No, but I really do feel like a little bit of debate or a little bit of arguing gets you to a better place.
I think it does. You have to have a difference of opinion, like I said.
I do like you, Tim. Sorry, go ahead.
Otherwise, like I said, you're not going to make any progress moving forward. And we disagree more than we agree, but we do it respectfully. And there are some things that I know he's an expert. It's impossible to be an expert at everything, right? You surround your people that are much more intelligent in different fields. And Chris obviously has a lot of experience in the retail space, especially. I have experience when it comes to athletic brands. So it's okay for us to disagree.
So, Chris, let's go there, because this is a really crowded space. You mentioned Nike, but, I mean, if you think about upstarts like Vuori, Rhone, then there are the big players like Nike, Adidas, and the like. How do you carve out a place for you specifically?
Yeah. So it's funny, just like with Untuck It, I really needed this product. And you might ask why. There's plenty of athletic brands and athleisure brands. For me, the athletic brands that existed, the quality wasn't there, the consistency of fit wasn't there. They were designed for performance, but they didn't have that modern fit. The athleisure brands have an incredible fit, very high quality fabrics, but not designed with performance first in mind. So I wanted a really high-end athletic brand that had a great fit, but also was meant to work out and would withstand being washed, not pilling. Yeah. Something that all athletes, not just professional athletes, could use all the time. And it's not inexpensive, so you want it to last for a long time. And I think that's where we are differentiate from these other brands. We're not athleisure, we're not athletic. We're kind of a blend of both, if that makes sense.
I've got yoga pants on that are pilling a little bit, so I totally get you. What's the growth trajectory? Tell me what we can talk. We're Bloomberg, we love numbers, you know that. What's the growth on this?
Well, we need you to go buy some pants. You just said that they're pilling. So
I'll get right on it.
We need you to help us out. But I think for us, I'll let Chris follow up on it. I think what we want to show as a brand, this is only our second year, we want to show progress.
Yeah.
Sometimes when you're building a company, a startup company, you want success right away. But you understand, you're a startup company for, I think they say 10 years. I mean, it's a long, long time. So we want to show some steady progression. I'll let Chris get into the numbers.
Yeah, so will it be 10 years before you really feel like it's there?
No.
Depends on how much you buy.
Okay.
No, I mean, there's so much competition. You want to just stay relevant. You want to make a great product. That's the first thing. You got to make a great product. You need your repeats to be there, which they are for us. The other thing that's really exciting with us is not just you have the e-com, then eventually stores, which is what I did with Untuck It.
Right.
We have a great wholesale business we're building at Greatness Wins. We have a golf business. We'll be in 80 clubs. We were in 80 clubs this spring. We have a bookstore business. Derek just wore a Michigan sweatshirt on as honorary captain of Michigan this weekend. We have a new dance relationship with Misty Copeland, who's our women's
I was going to say,
founder.
you need women who do a little bit of shopping.
NYMEX diesel October futures settle at $2.12. Gasoline October futures $2.92. WTI crude October futures at $68.97 a barrel, which is up $1.66 or 2.47%. And natural gas October futures settling at $2.35.
Or maybe a MLB team or anything?
No, I've been down that path. No, I'm going to take a break from that. I spent a lot of time with my 4 kids who are 7 and under, so it's a full-time job, especially when you're talking about Major League Baseball ownership. So at this particular point, I think I have my hands full.
So no other, yeah.
Well, when you say take a break, are you ruling it out for the future, or do you want to get back into
I learned a long time ago, never say never.
Yeah.
Because you never know. I just said it 3 times in a row, but you don't know where the future is going to lead you. But at this particular point, no.
I do also wonder, the two of you, like when you think about either athleisure or athletic apparel, companies that you look at that you admire, or leaders you admire. Let me ask you, Chris, first. Like, is there somebody that you look at and say, that's who I kind of get some cues from, or?
Well, I mean, we always talk about Nike and the Jordan brand. Those are the greatest, probably the greatest brand maybe ever. So while, you want to be them, but if you're half of what they become, you're very successful. And I think the athleisure brands are great too. I mean, I won't name them because, but I think there's a lot of great brands these days. So we're just trying to differentiate, give a reason, why you might need our product versus those products, and hopefully it works.
Leader, you look at? Oh, you're smiling. Why are you smiling?
There's a lot. It's one that comes to mind. He said Jordan Brand. MJ's been like a big brother to me, and I think I have young kids now, and you want them to choose their career path and find someone that they can look up to.
Yeah.
You want them to see someone who's been successful, and you talk about Michael and what he was able to accomplish on the basketball court, but I think you look at athletes post-playing career, he's up there at the top with what he's been able to accomplish from a business standpoint. So he's someone that I look to and go to for advice.
All right. You're going to go there?
You go.
World Series.
Baseball.
I know. I have to do this. All right. So you're going to be in the booth, right?
I am, yes. Yeah.
Who do you, can you think about who might be there?
I don't know. It depends. I'm not trying to skirt the question. I'm really not. But a lot of it is matchups.
Okay.
And we'll know in a couple weeks because, some teams, I know during my career, I used to play Anaheim Angels all the time. We just couldn't beat them. And, finally we broke through and we were able to win in 2009. But it all comes down to matchups. So there's some good teams out there.
Chris, you talk baseball, and I'm curious what you might think for the World Series.
Chris knows nothing about baseball.
Are you serious?
No.
I don't bother.
Do you really not?
I do know baseball. I'm a fan. I don't
and
bother.
You did a deal together?
I don't bother Derek with it. But I'm a Yankees fan. We'll see. They don't seem to be able to perform in the playoffs for the last 15 years now.
We'll discuss it on Fox.
Hey, listen, guys, got about 40 seconds left here, real quickly. In I don't know, a year from now, what's the conversation around your company?
I think we'll start to look at stores. I mean, I love stores. Not many people do in retail. We have 90 of them at Untuck It, and we're opening more. I think it's really important for the male shoppers, so I think we'll look at that, and we'll look at continued growth in these different areas that we discussed, bookstores, golf, e-commerce. So it's very exciting.
Same thing for you, Derek. In terms of Greatness Wins, in a year from now, what are we going to be talking about?
Well, I think it's all awareness. You want people to be aware. You want to walk around the streets and see people wearing it. And I'm very confident in the fact that someone buys our product and they wear it, they'll be happy with it, and they'll return as a customer.
And no pilling, you promise.
Well, you got to tell me.
Okay. Derek Jeter, of course. Chris Riccobono. You guys got me flummoxed.
how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape in fashion?
Yeah, AI definitely helped. When I did the jewelry, I used the AI, helping me to give some idea, but ultimately you still have to do a lot with it. It just give you very superficial ideas, and but at the end you still have to customize it, have to really make it and do that. I do not think that AI and the technology can replace the human mind at this moment. Yeah.
Are you concerned one day we won't be able to differentiate designs by AI and designs by an actual designer?
I don't know. For me, I see that when a designer doing is the spirit, is the heart that the computer don't have.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Yeah, I think that it would be irresponsible for us to ignore the AI revolution. I think that as much as there is a lot of short-term hype, I think long-term it has the potential to be transformative. And so we are spending a lot of time thinking about what elements of it are structurally have barriers to entry. And so there is a all element to that and which don't. And it seems to me that things like chips, things like infrastructure and systems has a little bit of that, because NVIDIA is so far ahead, it's expensive to catch up. There's, the technology that it requires to build these chips are sort of based in Taiwan. What we're seeing is that some of the apps and some of the applications, there are no barriers to entry, right? Like, it's fairly easy to come up with, and I don't mean to belittle the complexity of it, but there are not moats around those things like they used to. So I think that there is less of a winner-take-all in that space. You're going to have to earn that spot, whereas it'll be fun to watch what happens. And I think there's going to be a lot of money burned in the process, because somebody will develop something and a fast follower will come along and make it better and cheaper, because data gets cheaper and more pervasive, and it's going to be easy for new players to come in and do interesting things. So I think we wait and we see.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. 5,600 right now on the S&P 500 index. We're up 45, gain now of 0.8%. The Dow, the S&P, NASDAQ all rallying today. Peak PI Thursday with the Dow up 216, up 0.5%. We've got NASDAQ up 206 now, up 1.2%. The Russell 2000 index of small cap shares doing a little bit better, up by 1.4%. 10-year 3.68% with the the 2-year now yielding 3.66%. Spot gold up $45 the ounce to $25.56. That's an advance of 1.8%. And West Texas Intermediate crude oil up 2.6%, $69.03 for a barrel of WTI. Shares of Signet Jewelers are surging after the company said sales of its engagement jewelry are up, a sign that a crucial part of its business is recovering as more couples agree to wed following a pandemic lull. Signet right now up by 12.6%. Among the names reporting today after the close of trading, we'll be hearing from Adobe, and right now we got Adobe up by 0.7%. Again, recapping stocks higher, S&P up 46, up 0.8%. For on-demand news, 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week. Well, the latest episode of Chief Future Officer premiering last night on Bloomberg Television. The series, as you know, highlights companies and their CFOs, their chief financial officers, who, safe to say, after the great financial crisis, after the global pandemic, became a crucial member of the C-suite. They're often working side by side with their CEOs on systems, stresses, strategies, and success at companies.
Well, last night's episode was with the CFO of Johnson & Johnson, Joe Wolk. Bloomberg News correspondent and host of The Big Take, David Gura, sat down with him. David joins us here in the Bloomberg Business Week studio now. J&J, it's an iconic brand, an iconic company. It's been around for a long time. Tell us just about your approach, what you and the team were thinking as you did this episode, as you went in to speak with Joe Wolk.
So it's such a storied company. I mean, it's been around for a really long time, and I think a lot of people are familiar with it because of the consumer product side of it. But what made the interview kind of interesting is that, or especially interesting, I should say, is that this is a company that split pretty recently. Yeah. So the consumer products are now under a separate name. That's Kenvue. And then there's the other side of the company that works on pharmaceuticals and medical technology. So I was really interested to hear A, how that split came together, and B, how the CFO, Joe Wolk, navigated that with Joaquin Duato, who's the CEO of the company.
Those two know each other well, right? And
so well. And they've worked together. They've worked at the company for decades. And that level of familiarity was so fascinating to me. I mean, I think a through line through this series that we produce is the role of the chief financial officer has changed so much that they focus much more on strategy, trying to find new ways for the company to do different things. And that came through when I sat down with the CEO. First and foremost, just how much he relies on the CFO for guidance. And it was just a fascinating look kind of at this company that, again, I knew of at a kind of surface level, got to dig in pretty deep.
Yeah, and I also think it's a company, too, that, right, has had its tough times, right, when you think about different lawsuits over some different products. And I am curious, whether some of that came up in terms of what the CEO and CFO maybe had to strategize together on.
So they faced a lot of legal challenges over talc powder and whether that caused cancer, something the company denies. And there have been efforts to kind of get to a settlement, a multi-billion-dollar settlement there. Those conversations, those negotiations continue. And I kind of asked about that broadly, but also in the context of, is that an overhang on the company's stock? Is it something they're having to deal with as investors are kind of worried or wondering what's going to happen? And both of these guys said, no, that's not the case. But it's still very much a live issue for Johnson & Johnson, and something I think they are very keen to kind of figure out and get ahead of, but it's still something that's very much in process.
With the split, how do you explain the identity of J&J today? Because it's different than that consumer product side that we grew up with.
So much of the focus is on innovation. I want to play a little bit of sound here in just a sec, but you have this side working on pharmaceutical innovation, which is expensive. There's a lot of trial and error. Some things work, a lot of things don't. And then there's medical technology, where there is a lot of opportunity as well. And so one of the things that I talked with them about is this issue of kind of opportunities for synergy. And maybe we can hear a little bit what Joe Wolk had to say about that.
I think if you look at it 10 years from now, probably the competitive set that we have will look very different. There are technology companies that want to get in the space of healthcare. I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place. A lower cost to society, people living healthier, longer lives.
So talking about that kind of synergy within the company, but also outside, and that was kind of centered in this conversation about AI, for instance. Like, would they partner with a technology company that could bring some of that to bear? They think they're in a good position to do that. AI has a lot of potential to accelerate that process of finding and developing drugs, and that's something they're investing a ton of money in and hiring a lot of people to do.
Yeah, I do think about, here's a company, right, that's more than 100 years old. You do think about, like, kind of what's to come and how they think about it in a world where we've been spending, the last year or so talking so much about GLP-1 drugs and kind of where they go, where they think healthcare goes, where drug development goes.
So much of the focus is on cardiovascular health. They've done some acquisitions in that space on the pharmaceutical side, development on that side, and looking at sort of med tech opportunities to work on that as well. So yes, it's less on the sort of diet drug thing, more on these kind of traditional models, but kind of thinking through the entirety of the whole spectrum of patient care. So dealing with the drug side of things, but also what are the technologies that they could innovate and kind of bring to the marketplace that could make kind of work on both sides of that issue.
So how much of this is about innovating from within versus going out and making an acquisition of a proven technology or a proven drug that actually works?
They're definitely focused on both, and one of the cool parts of this show is I got to visit some of the labs on that campus in Raritan, New Jersey, and sort of see how all of this is unfolding. And
Brent crude futures settle at $71.97 a barrel. That's up $1.36 or 1.93%.
They're investing in their own in-house research. And we've talked about M&A as well. I mean, it's been a challenging environment for so many companies with rates where they are. This is a company that, in addition to being around for a really long time, has a really storied history and a very good balance sheet, has a lot of cash on hand, has a AAA credit rating. It's very well positioned to make these investments going forward. So getting back to what we were talking about at the top, Joe Walk, Joaquin Duato say they're approaching it very thoughtfully, just finding things that make sense. And some of those are big acquisitions that you would measure with a lot of zeros at the end. Others are smaller ones, but just thinking about that portfolio as a whole. And then, a huge challenge for pharmaceutical companies is this thing called a patent cliff. You develop a drug, acquire a drug, you have that patent for X amount of years. When it expires, it goes generic, you're not making the kind of money that you would have been before. So thinking through that and just by doing that, having to have such a long frame of vision to think, like, what's going to happen when that happens? What am I going to have in the pipeline to replace it?
And I also do wonder, as the team goes through, and you went through in this particular case with J&J, what they had to say about kind of our global environment, whether it's politics, geopolitics, the upcoming election. You've been spending a lot of time certainly following the campaigns, David. And I just wonder, what are the stresses? Do they talk recession? What are their concerns?
They didn't have
beyond the patent cliff, which I know is always there. Of course.
We didn't talk about the campaign in specific or directly, but one thing we did talk about is how the company is navigating the Inflation Reduction Act, which the Biden administration pushed through, and one facet of that is kind of a renegotiation of a lot of drug prices as a result of that Medicare pays for. And it's something that's a very hard-fought issue for a lot of these pharmaceutical companies. Both Joe Walk and Joaquin Duato said to me, they're not disputing the fact that drug prices are too high and people are having to pay too much for them, but they're faulting the way that law is put together and the onus on them to bring those drug prices down. So it seems like that's the point of interface for them the most when it comes to politics, is how they can kind of bring their side of this to bear, make sure that policymakers understand why that is such an important issue for them, why drugs are priced the way they are. And we were talking about innovation and all that goes into developing drugs. It's expensive, long time work, and they say if you start cutting these prices too much, it's going to make it difficult for them. Of course, people push back on that, but that's their position.
David, very briefly, 30 seconds left. This is a company that's more than 100 years old. What do you think the conversation that they want people to be having in 100 years about Johnson & Johnson is?
I think they want to be seen as a real big player in drug development in this country and around the world, one that developed real solutions for some of the worst diseases that we've seen. And so we saw, during the pandemic, a lot of these companies pivoting and working really fast to develop immunizations. They were among those that did. I don't think that they had the popularity of Pfizer, Moderna, but it's something where they pivoted very quickly to work on it. I think that they want to kind of preserve that legacy going forward.
We saved the most important question for last. Did you get to bring the lab coat home?
I did not bring the lab coat home, but those who tune in on YouTube or Bloomberg.com will see me in a lab coat.
You did Chipotle CFO, right?
Yeah.
Did
you eat a lot of Chipotle?
A little bit.
Guac to go.
Did you get to develop any drugs?
No, Doug, no.
Okay.
No drug development.
I guess it depends.
It was a very cool thing to do. Okay. I'm very grateful that I got to do it.
Really good stuff. Bloomberg News correspondent and host of the Bloomberg Big Take, David Gore. You can watch the next episode of Chief Future Officer now at Bloomberg.com and, of course, on YouTube. Coming up next, holiday travel plans. We're going there.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, a story from the Wall Street Journal today we want to bring to your attention. Millennials, you know, those younger folks. You're a millennial, aren't you?
I'm an elder millennial.
Elder.
Elder.
Ouch.
It's a real thing.
Ouch.
Yeah.
All right. Anyway, younger
Wear it with
folks, millennials, older millennials, elder millennials like Tim, increasingly going on cruises. Who knew?
It's not the cruise their parents nor
No.
grandparents went on, though. They want quick escapes, private islands.
Yeah.
So the Wall Street Journal notes.
Yeah, it's an interesting story.
I mean,
so,
I
what?
would do it. Yeah. Private island?
You're there.
All right, yeah, why not?
Who doesn't want to go to a private island, young and old? Anyway, with more on the travel scene and the upcoming holiday travel season, back with us is Haley Berg, lead economist at the travel app Hopper, joining us once again from Boston. All right, first up, before we get into your holiday travel outlook, you guys recently have come out with a report. Travel, holiday travel, consumer travel, is it slowing down? Are people looking for bargains? What are we seeing right now in today's environment?
We're seeing that this holiday season will be busy. Most Americans see holiday travel, if they do travel, as an essential expense. And that's reflected in what they're telling us. Right now, about 75% of Hopper customers say that they're going to be spending more on holiday travel this year, or at least the same as last year. And to do that, about half are cutting back on other expenses and are looking for deals and discounts and ways to stretch that travel budget further. So the demand is there, but so is that price sensitivity and a little bit of concern about being able to afford travel.
Are we too late, Haley, if we haven't booked our holiday travel yet?
You're not too late. Now is actually the perfect time to start planning your holiday travel. Our recommendation at Hopper is book your holiday travel, both for Thanksgiving and Christmas, by October 14th. That's the sweet spot when prices will be at their lowest and flights won't be sold out yet.
All right. So, in terms of where folks are going, where they should be going, where there are deals, what do you have for us?
Most folks are headed to bigger cities in the U.S. over the holiday season. We see a lot of major hubs. Think New York City, L.A., Chicago, Atlanta. Most travelers going domestic are headed home for the holidays, so they're hitting those hubs and then either being picked up or going somewhere local. But internationally, we do see a lot of travelers getting away, making a week of it, whether it be at Thanksgiving or Christmas. And those destinations are bigger names like London, Paris, Tokyo, and Seoul.
Haley, what does the activity on Hopper tell you about disposable income for Americans right now? What story does it tell us about the economy? What's the narrative that you're seeing out there?
The majority of Hopper users are Gen Z and millennial. They're younger and they spend differently than older generations. What we've seen is that Our users are willing to spend on travel. They're expanding their travel expenditure. And how they're doing that is being smart about when they book. So they might get the lowest price on their airfare, but then they'll spend $40 extra on a product like cancel for any reason or disruption assistance. So it's a generation of travelers who are price sensitive, but very focused on value. They want to get the best price and they want to splurge on things that are going to improve their experience, whether it's a fancy cruise or a product that lets them rebook if they're canceled or delayed at the airport.
Haley, if people do have flexibility, what are the best days to book holiday travel? I was actually looking at the difference between like flying on Christmas and New Year's Day, for example, and how much cheaper that was than flying, let's say, the Saturday before Christmas and then flying back the Sunday before New Year's. I mean, it was like 60% of the cost.
Absolutely. It'll actually save you on average about $200 on any domestic holiday trip if you travel on the holiday itself. Think Christmas Eve, Christmas Day, Thanksgiving Day. We know not all travelers are that flexible. So if you are a little bit flexible and you can travel, say, the Monday before Thanksgiving and return the Monday after, skip that Sunday return, you will save over $100 per ticket. And at Christmas, what you have to avoid is the Saturday to Saturday or Sunday to Sunday, making a week of the holiday. Try to depart the day before Christmas Eve or on Christmas Eve. Come back on New Year's Eve. That's how you're going to get the lowest price.
Hey, I want to go back, though, to what Tim asked you about discretionary spending or disposable income or disposable spending money, if you will, that consumers have. Do you feel like there's any signs that consumers are really, really pulling back?
What we're hearing is that pullback isn't happening on travel, but it is happening elsewhere. About 50% of our customers said, I'm going to cut back on other expenses in the next couple of months so that I can keep spending on my holiday travel. So there's definitely pressure on wallets. Discretionary spending is under pressure, but travel has really come out on top as one of those areas where travelers are working hard to maintain their expenditure.
All right, and before you go, those elder millennials like Tim, are they going on cruise ships? Are they doing, what are you hearing about the cruise industry? Just got about 25 seconds left.
You know, we're hearing that younger travelers are interested in value and packages. They want accommodations, transportation, and a great experience at a great price. So cruises are one way that they're achieving that. Other ways are finding great deals, package deals, whether it be through a platform like Hopper or One Travel.
So Tim on the Lido deck, it could happen.
I don't even know what that means.
That makes me just so upset that you don't know that. All right, Haley Berg, thank you so much, lead economist over at Hopper. All right, for those watching on TV, the close is coming your way. Tim and I continuing on Bloomberg Business Week, on Bloomberg Radio, on YouTube, and on Bloomberg Originals.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
Investors looking past inflation, but looking to exactly what? Not quite so clear. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Alex Steele. I have a suggestion for you. NVIDIA?
Okay, why not?
I mean,
tried and true.
It kind of feels like, exactly, tried and true. So there is a rally. Earlier, there was a whole lot of nothing happening. You have the S&P up 0.7%, the NASDAQ 100 up over 1%, the VIX lower, all calm. It's really NVIDIA kind of really leading the charge on that one, Romaine.
Yeah, absolutely here. And when we talk about that eco data that we've been obsessing over, I guess the good news is that's finally starting to clear out ahead of next week's Fed meeting. U.S. producer prices this morning did come in, and they did show a slight pickup in April after downward revisions in July. But most importantly, the PPI categories that really feed into the Fed's preferred inflation gauge, they were muted. Markets, though, not quite sure what to make out of it. Oscillating between gains and losses earlier in the session, but bulls trying to maintain control until the closing bells in less than an hour. And a big part of that bullish pull is coming from, well, what Alex just referenced, AI and the chip trade once again. NVIDIA on a 4-day, 16% run right now, with AI back in focus on Wall Street and back in focus at the White House. CNN reporting that OpenAI CEO Sam Altman, Google's Ruth Porat, and Anthropic's Dario Amodi meeting with senior officials in Washington today. A discussion on this show ahead about the regulatory implications for the hottest industry in the land. But as interest and budgets increase for the AI and chip sector, budgets and interests are waning in the pharma space, at least for Moderna, as some of its COVID peers are struggling to find a path to vaccine profitability in a post-pandemic world. Moderna, last time I checked, Alex, that was the biggest decliner in the S&P 500.
Oh yeah, just continues to get punished here. So this is a great way to illustrate kind of the whippy action we've seen in the last few days. I should point out that just like a look at August and September, just sort of the peak to the trough when it comes to S&P moves, quite extreme. So yesterday it was 150 points for the S&P, obviously very significant. Today we're still at 65. Now the question is why, right? Like the eco data didn't really do anything for us. Bond auction didn't really do that much. Earnings, okay, you got Kroger, but that was really it. So Charlie McGilligot over at Nomura had a note out this morning that said NVIDIA is actually the kind of entity that has central bank power at this point. And then when customers said yesterday that they still really want these chips and there's a lot of demand, boom, you had the FOMO. And the market FOMO, I wonder, is that what's trickling through here and really boosting tech today as well, Romain?
I love that central bank power here. Of course, a catalyst and maybe, I guess, a fight for who really wears the crown in this market. Well, wearing the crown right now to help kick us off to the close is Mimi Duff, Managing Director over at GenTrust, joining us here in Studio 2. You wouldn't try to compete with NVIDIA, would you?
No, but I like the crown.
Let's start there, because this gets to the point, and we've kind of been through various market cycles where we've had one or maybe a small handful of stocks that really just have dominated everything. They are kind of like the vortex for the entire world. And NVIDIA, and I guess you can maybe broaden out to chips overall, that is the trade right now, isn't it?
Sure is right now, yeah.
Does anything change that?
Well, the thing that, what I would point out is over the last 100 years, there have been market leaders, and it's usually a narrow set. So what changes the AI? I mean, we are seeing, if you look at the equal-weighted S&P, it's gathering more strength. So we are seeing a broadening of the recent rally, and I think that that would be a healthy thing to see continue.
When we talk about, and you make a good point, I mean, we've been through this before. It was Apple. In the old days, it was GE and the telecoms. We've always had this, this sort of a churn that goes through, but it always raises the question that if you were not lucky enough to sort of get on this train right when it left the station, do you try to get on it now?
I wouldn't get on that narrow set right now with the amount of enthusiasm and the PEs priced into that sector.
It just looks too rich for you.
It's a bit, yeah.
But it winds up moving, if what Charlie McGilligot said was true, right, it's central bank power and it really has the power to move the markets, then it's hard to ignore, right? Is it just sort of like the broader indices is what you want to own, or you want to fight against it like you wouldn't want to fight against central bankers?
No, well, we would want to own the broader indices and just keep our humility and let the winners win. But we think that the bigger picture is going to be dominated by the economic cycle and these other drivers and not a few companies.
So central banks still matter. Okay,
they do matter.
Tell Charlie that. Within equities, you guys still remain underweight, right? So what's your signal to buy?
So we've been underweight equities and overweight fixed income. Fixed income has been a smoother move, frankly, and it's also rallied with yields coming down, pricing ahead of this easing cycle that's very likely to start in a week. We've seen the amount of, you showed the intraday volatility on the equity side, but also the August dip. We think that that highlights some fragility in the markets. What would cause us to get back our exposure? Probably if fixed income got too dear, too rich, that would be one thing. Another, repricing in equities, a substantial repricing. A third bit would be if we get greater confidence that a soft landing is possible, which I think is the Fed's baseline right now, and it's probably the equity market's baseline. But we think it's a pretty high challenge to land that plane so carefully, coming from a 5.5% funds rate.
Where do you think, though, what the Fed can do? Because we've gotten to this point now where everyone sort of knows this easing cycle is coming.
Yeah.
There's still a lot of disagreement as to exactly how aggressive or how expansive that cycle is going to be. Remember, this was a market that really did think we were going to get 75, 100 basis points of cuts this year alone. They've really pared back some of those bets now. I know 25 is the basis that we're going to start with. Is that
for
your
next
case?
week? Yeah, I mean, I think, if gun to my head, I would say that.
Yeah.
But look, we have 100 priced in for this calendar year. 4 cuts and 10 cuts priced in through the end of next year. And I think that leaves a good amount of variability. That's the average kind of cut. So, or the average, what's priced in the market. But look, you could see a weakening economy where on the way up, the Fed hiked aggressively. We could see if things were to weaken, them ease aggressively.
But I'm curious about when we look at the number of cuts priced in, and I'm glad you went out to 2025, because this gets into the soft landing scenario. If you're talking about bringing the Fed funds rates down from whatever 5.25 on the low end, down to, I guess, based on the number of cuts you're talking about, that would take us to round 3 or majority or less. Is that a soft landing? I mean, if the Fed feels compelled to take us down to 3, I would think that there's got to be some weakness there in the economy somewhere.
Well, we are coming from a very overheated employment picture and a ridiculous, inflation picture. The inflation picture is so well behaved now. On the employment side, we've softened. We're not in negative territory, but we're back to the pre-COVID levels. So to get us to 3%, yes, some weakening from here, but also the Fed knows they're restrictive right now. So I would say that the actual path that we see the speed with which the Fed moves will be dictated by when and how that weakness develops.
You had mentioned sort of when yields get too overheated, then maybe you'll reallocate some money from bonds into the equity market. What yield is that?
Well, right now at around 370 in 10 years, we just don't think that's very exciting at all. I mean, that's pricing in this kind of midpoint. Look, if funds were, I think we have a higher degree of odds on a recession than the market, and that justifies lower yields than, say, the market. But if you got a perfectly soft landing and Fed funds were down at 3%, then probably 10s could be a little bit low. On the equity side, it's all a relative play for us. So we had this strong conviction. We thought the bonds were going to perform in a better range of scenarios, so we took money off the equity table to put it there. So we'd have to kind of see how things develop with the data.
How are you guys looking at the election, by the way?
Yeah, so all of our analysis on the election is inconclusive, right? So it really depends the exact composition that you're going to get. We don't think either party is going to have a clean sweep. We think that whatever economy is handed to the incoming president matters more than a lot of the other factors. So we're not really playing for one way or another right now. And the polls show they're so close at this point, so it's not at our forefront.
All right, Mimi, great to talk to you. Mimi Duff, Managing Director over at GenTrust, kicking us off to the close here on this Thursday afternoon. When we come back, we got a message for all you junior bankers out there. Over at JP Morgan, they're capping your hours to get this, a measly 80 hours a week. We're going to talk about JP Morgan's version of a better work-life balance.
I don't want it. All right, plus executives at major tech companies discuss how to charge up AI infrastructure at the White House today. Salesforce has AI-related news of its own. We're going to break that news in the 4 o'clock hour and what it means for the AI arms race.
And we're also going to talk about Boeing here. Of course, the company really just can't catch a break. Right now, it's facing the potential here for a strike at one of its key factories. Contract negotiations going down to the wire. A big vote on the latest negotiations. All that and more coming up in just a bit. This is The Close on Bloomberg.
Trump, commenting on Truth Social, says there will not be another debate with Kamala Harris.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. The Fed decides.
I know we're all obsessed about what the Fed may or may not do on September 18th.
25.50, that doesn't matter so much.
We're being very measured where maybe other central banks aren't.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We have made no decisions about future meetings, and that includes the September meeting.
At this point, the Fed is leaving it open.
It's going to be up to Chairman Powell.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
JP Morgan and Bank of America, two of Wall Street's largest investment banks, are rolling out some measures that may ease junior bankers' workloads as complaints continue to rise across the industry that weekly hours are increasingly creeping past 100. Bloomberg's Catherine Doherty joins us now, and she broke the story. This basically means 80 hours. Unless you got a deal, you got to close.
That's exactly right.
Does that mean the floor is 80?
The floor is 80. So the real question becomes, do these measures, do these so-called protections actually make a difference for these junior bankers, right? Is their way of life, is there hours that they're able to sleep? And the actual type of work that they're engaging with, if the exception for that 80-hour cap is that you're working on a live deal, well, presumably if you're hired as an investment banker, you want to be working on live deals all the time, right? That's how you're developing your skill set. That's how you're going to be promoted to the next level. So this 80-hour floor seems to be actually the minimum, which to me indicates that there's still some work that needs to be done in the industry.
That's why I'm curious, like how serious we can take this. I feel like we went through this already a couple times. Saw this with Goldman. We saw this with Citi. We're trying to make a little somewhat more genteel environment, whether it was sort of, oh, you can take vacation whenever you want. There's no set amount of days. And then, of course, they're like, if you take more than a couple, you're basically fired. When does Wall Street, why are they even play this game, right? I mean, we know what it takes to get to these levels in the investment banking industry. Why are they trying to pretend like it's something different?
So some of it is necessary changes. Bank of America, the changes that they're rolling out, it actually has to do with technology that they were using in the past that has become outdated. And part of the reporting of the hours that the bankers were putting in was weekly. And essentially the new technology that has a better infrastructure, and I think it communicates amongst the teammates in a more efficient manner, now bankers are going to be inputting their hours on a daily basis, and their managers will be able to see in real time or more accurate representation of what their junior bankers are able to handle, and if they're able to pick up more work or if they need to be doing less.
If they're not working on a deal, why are they working 8 hours a week?
I think that there's
What do you do? Do you just hang out? Like,
there's definitely a lot of client development. There's ideas that you need to come up with for the next deal. You're constantly thinking about your next pitch. So just because you're not hired on a deal that you're working on that's going to go live doesn't mean that you're not chasing business.
As you can see, we're very skeptical of this whole 80 hours of thing. But in all seriousness, I am curious, is there also an issue here of competition? I mean, I know there's anecdotally, there's been a lot of talk about, private equity firms, hedge funds, other places that have sort of siphoned off folks from the traditional avenue of going to some of the big traditional banks here. Is that a concern as well?
That's right. I think that reputation matters on Wall Street. And if you see firms in the headlines that there's junior bankers that are complaining, even social media has changed the game in a real way, where I talk to young people starting out their careers on Wall Street, and they see the type of interaction and the feedback from different firms, and they're making their decisions even before they start their first job of where to go. And then maybe the next job in private equity, that might be accelerated because you don't want to put up with the grueling work hours that.
And can't you make more? I mean, like if you're going to bust your butt for 80 hours a week or plus more, and if you can go to a different sort of side of the industry and make twice or three times as much, why wouldn't you?
That's right. The economics, the incentives, they're all changing.
Yeah.
But I will say that the period of 2021, when you saw a real shaking of the ship, and the junior bankers were jumping to private equity, or they were jumping to even other banks because they could chase bigger paychecks. That is not. It's not as accelerated as it was in the past.
All right, Catherine, how many hours a week do you work, by the way?
I had a call last night working on this story. Someone asked me, "Don't work too hard." I said, "I am nothing compared to some of the bankers that we're writing about."
All right, Catherine, already a closer look at some of the potential changes there on Wall Street, particularly over at J.P. Morgan. And, we all get a chuckle out of it when they say, hey, don't worry, you don't have to work more than 80 hours a week. And then, of course, Catherine comes on and is like, oh, that's more of a floor than a cap.
Yeah, Matt Levine had a great piece out sort of getting on this, too. Catherine's nodding at me, is that he was making the point, too, that, look, you work like that for 2 years, but you work like that because then you know how to do your LBO models, you know how to do all your financials, then you can sit in meetings, not have your Excel sheet out after that, become a senior banker, and actually be able to know stuff and say stuff. If you don't have those 2 years of 80-plus hours a week, do you not have that knowledge?
I don't know. And then we've also talked, this kind of gets us into a different topic, which is the whole, boom of AI and trying to automate a lot of those tasks that would normally go to those junior bankers, which, of course, would rob them of exactly what you just said, of that sort of experience that gets you to a level where you can't communicate like that.
Yeah, I don't know. You tell me.
I don't know. Alex, we're in a different phase of our career, so thankfully, or hopefully, we won't have to deal with an 80-hour floor in our work week here. When we come back, though, I think folks over at Moderna are really scrambling right now. The big vaccine company is really trying to find a way to capitalize on the COVID-19 boom, trying to find new uses for its vaccine. It's been struggling. We're going to talk to you about some of its latest moves to cut costs rather than just focusing on growth. That's coming up next on The Close on Bloomberg.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race. And Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
its own bank,
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
All right, right, let's get a view from the sell side with our top calls. The big movers on the back of analyst recommendations, and we start off today with Carvana, the used car dealership getting an overweight rating and a 190 price target over at Stevens, as analyst Jeff Lick picking up coverage, praising Carvana's business model and profitability, saying it enables economies of scale to provide a higher quality, convenient, and lower cost consumer experience. Those shares up 5.5%. Next up, Roku, second upgrade this week. This over at Wolfe Research, lifting its recommendation to outperform. The analyst, Peter Supino, says fundamental risks are falling and sales growth rising. Two factors he says should bury any debates about profitability. Investors liking it, bidding the shares up by 6%. And we want to end things on Micron, the maker of computer memory chips, hit with a double downgrade from outperform all the way down to underperform. BNP Paribas making that cut, also slashing the price target to a street low $67 a share from 140. The analyst warning investors of oversupply in high bandwidth memory chips. He also sees Micron underperforming AI peers through 2025. Those shares down 4%, and those are some of our top calls. The decline you're seeing in Micron doesn't compare at all to what we're seeing today in Moderna. It is one of the biggest movers of the day. The shares down in the dumps after the biopharma company announced updates to its sales guidance, but more importantly, a cost savings plan that involves deep cuts to research and development spending. Bloomberg's Jerry Smith joining us right now for more. How deep are these cuts?
So they announced that they're going to be cutting about 20% of their R&D budget.
According to ICI, US money market assets hit a record $6.32 trillion as of September 11th.
1 minute remaining now for the market on close imbalance. So we're looking now to the market on close imbalance. S&P 500 sell side 1.6 billion. NASDAQ 100 sell side 830 million. Dow 30 sell side 365 million. Mag 7 sell side 390 million.
Fed discount window loans $1.57 billion in the week ended September 11th, after $1.52 billion, and Fed bank term funding loans $97.7 billion in the week ended September 11th, after $98.3 billion.
US money market assets hit a record 6.32 trillion as of September 11th.
At 5 p.m. Eastern Time, we get South Korean export price year on year, prior 12.9%. And South Korean import price year on year, prior 9.8%. At 5 p.m. Eastern Time, we get South Korean export price year on year prior 12.9%, and South Korean import price year on year prior 9.8%. Just under a minute now. Ten seconds. Export price 5.7%, 5.7%. Import price 1.8%, 1.8%.
Kim Jong-un leads the test fire of a new rocket launcher, according to KCNA. Trump, no plans to participate in future debates. Trump addresses supporters at Arizona campaign rally. Trump to end all taxes on overtime. BNZ, New Zealand's August manufacturing PMI sees rise to 45.8.